Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, March 6th, and we've got some pretty crappy data. I'm not going to lie. We have some pretty crappy data this morning from a variety of different metrics that I'm looking at. And, well, we had a little bit of green at the end of the day yesterday. It was... I don't want to say a bounce because it's not a bounce, but it was something that it was a little bit of an uptrend that made us feel good. We ended 1% up on the S&P 500. Robinhood was up 4%. Palantir was up 6%. It was a good day, at least given the context of the past couple of weeks. I didn't even know some of the pieces of jobs data that were coming out this morning. I feel like this is jobs data that like usually no one cares about, but now that the numbers are getting kind of bad, everyone cares about it. But we got some pieces of job data this morning that are not the best. And I mean, I wouldn't say markets are necessarily tanking on that news. They're definitely not green in the pre-markets. And I guess we're going to see, well, markets are definitely, they're maybe tanking's a little bit harsh, but we're red. We are Nvidia's down 3%, Robinhood's down 4%, Palantir is down 3%. So it's enough red to say, all right, I think this is the reason. It's because of this jobs data. The S&P 500 is actually down 1.1%, down 1% in the pre-markets before we even get into the opening session. Makes it more likely than not that this data is the reason for why we are getting so aggressive. Let me see if I can share my screen right here. So I got some notes this morning that that StreamYard isn't working. So let me know if you guys can see my screen. Hopefully you can, because some other streams were having an issue with sharing their screen. Let's see if it works on my end. Yes, you can see it. Okay, perfect. Cool. So you guys can see it. Cool. So S&P 500 down 1.12%. Yeah, that's tanking. That's dumping. I get mad when some of you guys say, oh, it's dumping and it's down like 0.02%, but no, everything is dumping in the pre-markets. Abercrombie's down 1%, Nvidia's down 3%, SoFi down 3%, Robinhood down 4%, Rocket Lab down 4%, CrowdStrike down 2%, Marvell, we talked about their earnings yesterday. We'll talk more about them later in the day. That's down 17.8%. Tesla is down 2%. I mean, the only thing that's green is BABA. I guess because money's deciding to leave the United States and go into the CCP. But everything else is red. Everything else is pretty much red. Now, why is it red? Let's get right into it. First of all, thank you everybody for being here. Good morning, good morning, good morning. This is the data that, I don't know if you guys knew this was coming out today. I didn't know it was coming out today. But apparently we got some data about job cuts from U.S. employers. The number is 172,000 in the month of February, which is higher than 49,000 in the month of January. And this is the highest number of monthly cuts, meaning private employers that cut workers, since July 2020. So, yeah, that is this is aggressive, bro. This is definitely pretty aggressive. 172,000 jobs gone in the month of February. That's not as well. Here's the exact chart so you guys can take a look at this. The explanation right here from Trading Economics is that it is also the highest total for the month of February since 2009, with the impact of Department of Government efficiency actions, as well as canceled government contracts, fear of trade wars, and bankruptcies. Job cuts soared in February. Andrew Challenger, the firm's workplace expert, said here today. So, look, that's not good. Losing 172,000 jobs in a month of February, it's hard to defend that. Obviously, that is up basically 3x from the month of January, month over month, which is bad. And we haven't had this type of a monthly jobs cut since July 2020. So it's been almost 5 years since we've seen 172,000 jobs get hit in the month of February. Look, even if some of those are government jobs, even if those are private sector jobs, the point is those are a decent number of jobs that got cut. And I don't think the market kind of knows how to interpret it right here. Obviously, the market is picking red as their interpretation of that. I wouldn't be surprised if the market kind of swallows that news up and doesn't care about it later. It's just that there's been so much news that's been relatively crappy that the market has kind of overlooked to an extent. I don't know if this is the one that they're going to overlook, and I think the S&P is showing that down about 1.2%. We also have some other pieces of data we'll look at, but that was kind of the core macro data this morning that I think is causing the volatility to the downside. We also had initial jobless claims, which actually came in better than expected, thankfully, so that wasn't too bad. Initial jobless claims were 233,000. The market was expecting 233. We came in at 221. Last week it was at 242. So last week we came in 20,000 more than expected in terms of initial jobs claims. This week we came in basically 15,000 below, which is nice. But nonetheless, the February jobs data of the amount of private payrolls that were cut in February, this was pretty bad. This also comes after yesterday's data in regards to the 77,000 jobs in private payrolls versus the 140,000 expected. So when you miss on the private ADP data, and then when you have 172,000 jobs cut in the month of February, the highest since July 2020, yeah, you're probably going to get a stock market that gets upset. And I think that's what we are currently seeing right now. Look, I think the other thing about this is that, again, there's been so many different conflicting pieces of data. So as we look at this jobs data, and I say it's bad, the ISM data we got yesterday was actually really good, which is why the market was up. And honestly, like, is it that bad that we're getting this type of data? Because at the end of the day, if it decreases inflation, which is what the Fed cares about the most, yeah, it's actually not the worst thing in the world, at least to get the Fed to get closer to giving us that rate cut, which is good for equities. The question, again, the fundamental question that everyone has to keep repeating to themselves is the slowing down of the economy enough to outweigh the inevitable rate cuts? And will the Fed, the subsection to that question is, will the Fed be able to deploy those rate cuts at a reasonable rate before everything slows down to a point where now the Fed is reacting versus the Fed is being anticipatory of those slowing down of the economy, aka the labor market weakening and worse things happening, which would cause them to give us those rate cuts, right? Like, is the Fed going to be able to deploy the cuts before shit hits the fan? Because shit is hitting the fan. It's just how bad is it going to be when it hits the fan, and is the Fed going to react, or are they going to be anticipatory before it happens? And I think that's going to be the multi-trillion-dollar question that we're going to find out. But we will see. Powell's speaking tomorrow. Okay, cool. So I didn't know Powell was speaking tomorrow. We'll get more updates from Powell when he does speak tomorrow, get his thoughts on the jobless claims. I think whatever he says tomorrow in regards to the labor market is going to be really important, because look, if the labor market is this bad, based on the data that we talked about when it comes to private ADP payrolls, we get non-farm payrolls tomorrow, and these job cuts that we got today, is there a world where Powell says, all right, yeah, we're ready to cut? Which is what I think a lot of economists are thinking he should be doing. Like, he should not let it get that obviously bad. If it's already starting to weaken, give us the cut. Because the argument is, well, if he cuts, inflation will reaccelerate. Well, if we're actually getting a real slowdown in the economy, no, inflation's not going to reaccelerate, because people are not going to have the money to spend, which means the cuts are actually just going to be a cushion to the inevitable slowdown. But that's okay, because like, we need a cushion, and the slowdown inevitably is coming, and we already know that the slowdown is coming. So, I mean, I don't know. This is going to be a really important one, but we're going to see how this plays out. 42% probability for a May cut. Oh, that seems like it went up then. Hold on. Let me pull that up. Yeah, you're right. May just went to 42% for a cut. That's 46 right now. Wow. So, I mean, I thought a couple of days ago, June would be the earliest we get a cut. I mean, if the data keeps coming in like this, March is still a 7% chance, so it seems unlikely, but May, 46%. Getting close to a coin flip on May to see if we get that cut. Stagflation, remember that word. So the reason I don't think we're going to see stagflation is because I don't think inflation is accelerating. I mean, for those that are claiming stagflation, you've really got to be like gung-ho that inflation is going to accelerate. And like, inflation has been showing signs of growth, but with this much weakness that we're seeing, especially with consumer confidence, I don't think that thing goes up, especially with the fact that shelter is lagging in the data in and of itself. So I'm, maybe I'm wrong on this, but I don't think inflation is going to show massive gains in the month of February when we get CPI and PPI, which we also get next week. If they do, and we have slowing growth, then we got some issues. I mean, then we got some real, I really hope that doesn't happen. But yeah, I think we avoid stagflation, but we could not avoid a slowdown in growth, which is bad for the markets, but that's where the Fed has to come in for rates. So we're going to see Trueflation is really low as well. Yeah, it's Trueflation. And again, I trust Trueflation a lot in terms of they've been right for the majority of the past couple of years in terms of calling inflation being up when it wasn't up and it being down when the market says it's not up. 1.3% on Trueflation. Inevitably, this number is going to come in and it's going to be lower to the Fed. The question is just when. And again, the question is, are they going to be too late by cutting rates, because if inflation is low, they'd have no problem cutting rates. But if the economy is down the gutter, and then they realize inflation is low, and then they're like, oh, well, now it's the appropriate time to cut rates, then they're too late. Then they missed it, which is exactly what happened in 2021. And it would be really ironic if it does a round trip on the upside where inflation was going up, they were too late. And on the downside where inflation is going down, they were too late. Like, that would suck. But like, that's what we're seeing right now. You know who's not waiting? The ECB. The ECB, the European Central Bank, they said, hey, we are cutting our rates by another 25 basis points. ECB lowered their 3 key interest rates by 25 basis points as expected, reducing the deposit facility rate to 2.5%, the main refinancing rate to 2.65%, and the marginal lending rate to 2.9%, all of those below 3%. Through their targets, they're saying that inflation is projected to average 2.3% in 2025 and then 2% in 2027, with core inflation also nearing the 2% target. They also acknowledge that monetary policy is becoming meaningfully less restrictive, easing borrowing costs for businesses and households. So the ECB is basically recognizing that, yeah, it's probably time to cut, especially given the slowdown we're seeing in our economy. And if we kind of don't have this cut, we are just waiting for the Fed to continue to have markets that are uneasy. And that would just create, a more reactionary policy than anticipatory policy. And it looks like the ECB is at least taking some action here. Speaking of the ECB, German bonds yesterday did the worst they did since 1990. German bonds soared. American bonds collapsed because people started buying a lot more U.S. debt. Where's the 10-year today? The 10-year is actually up today. That's weird. Not sure why the 10 with that jobs data, you would expect the 10-year to be down. But German bonds were up because people started selling off German bonds, basically showing that the bond market doesn't trust European debt, and they don't trust kind of how the European debt market is playing out, especially given the financing of a variety of projects that Europe is currently engaged in versus US debt. They're at least trusting Doge to an extent, and they're trusting that Trump is going to get this 10-year to come down, even though the 10-year is up today. But yeah, the ECB lowering those rates, maybe that starts to get European bondholders and particularly German bondholders to start buying Germany's debt, because obviously if rates come down, then you would want to secure your yield as quick as possible. This is interesting, dude. This is really, really interesting. For those that are just joining, the main jobs data we are looking at is a surge in layoffs in February 2025, 172,000 jobs. Put in the chat if you know someone who's got laid off. Personal family member, friend, put in the chat. I mean, do you guys feel this anecdotally as well? This academic data about 172,000 job cuts. Do you guys personally feel that in your own lives? This is up from 49,000 cuts in January, and this is the highest number of monthly cuts since July 2020. Wow, there's a lot of yeses here. Holy crap, dude. Those are some quick yeses. Interesting. Huh. I would say at least like 70% of you said yes. A decent chunk of you are saying yeah. And I'm assuming also, there's a bunch of you that reached out to me about just like anecdotal data around like the store you work at or the retailer you work at, and sort of the employers are downsizing by 20 to 30%. I mean, I've heard that data by a bunch of you guys for the past couple of months now. Yeah, dude. See, this is one of those things where this is just something you can't ignore, right? You can try to make sense of it theoretically, but it's really, really hard to ignore this. So let's get some coverage on these job claims, and then we'll keep going from there.
We're going to wait, Joe. We do a rapid update, as you know, and we're going to wait till the jobs number tomorrow. It's not our model. What we do is look, it's a good question, Joe, and I'll take a second to respond, because Atlanta Fed is one model of the economy. Why the market has decided to back this one model. There are many models out there. Goldman has a model, and Bank of America has a model. Mark Zandi, Action Economics, Mike England has a model. We put together the average of 20 models, Joe, when we do our rapid update, because we don't think one model is the right model necessarily. What you see in the Atlanta Fed is a massive decline or subtraction from the import growth. And this relates to the data that came out today. And the reason you need to understand that is when we import a lot of stuff, it's a negative for GDP until it's sold or ends up on the shelves as inventory. At this moment, we're not counting it where it's gone. It's just come in. And some of this looks like it was a big gold import, which is a weird thing. Other parts of it, however, could be front running the tariffs. So you would have a negative subtraction in January, maybe in February as well, until things normalize and we figure out what the trade rules are and companies can get back to a more normal or average instead of front running these tariffs. It's good news, by the way, the claims number did not go up more broadly. I am still tracking some additional claims or continuing claims in DC, Virginia, and Maryland. They have been up about 10 or 11,000. Again, folks, on this score, and I didn't look at it, but I can in a second, look at the separate track for federal workers on jobless claims. They are tracked separately. What I'm looking at in the Maryland, Virginia area and DC area are the effects of private contractors. This is something, Joe, we're going to watch over time.
And also in the Maryland, DC, DMV area in the United States, you've got a bunch of government cuts. I mean, we talked about the SEC giving a ton of money to get people to quit. We talked about the IRS downsizing by 50%. We talked, I didn't mention this. The Department of Veteran Affairs yesterday said they're thinking of getting rid of 80,000 employees in an internal memo. I mean, like, unemployment is going up. Like, it's really hard to imagine, even if it's only by a couple basis points. We're at 4.1 right now in unemployment. It's hard to see that being below 4.3, 4.4 based on some of the data we're looking at least over the coming months. Which then again, it begs the question, is the Fed going to react? And Jay Powell speaks tomorrow, so we'll get a little bit of an inclination of how he's thinking about this. The ECB is already reacting. They kind of said, all right, it's their move. Canada cut rates last month, so now it's up to the United States. Are we going to be stubborn about it? Are we going to need inflation to literally go to 2%? Or are we going to kind of recognize this before it happens? 36% of you say yes. 64% of you say no on the poll about do you know someone losing their job? Even the fact that 36% of you said yes means there's a decent chunk of you that are saying, yeah, I know someone who got laid off. And then the question is, how quickly do the people who got laid off find a new job? How long are they unemployed? We got a lot of government workers that are going to be living off severance for probably 5 to 7 months. And then can they transition to the private sector? Are they able to work in the private sector? Does the private sector even have the jobs to be able to provide them? Because right now the JOLTS data, which I think we get next Tuesday as well, an update on that. The JOLTS data is 7.9 million jobs available, but no one believes that, right? Like, no one actually believes there's 7.9 million jobs available. And if we get that thing to start getting revised down to like 5 million or 4 million jobs, and we start losing a lot of the ghost jobs that were never there, yeah, that's going to be another thing that we have to pay attention to as well. Farzad, shout out to you in the chat. He says, the crazy thing is 25% of 2023 and 2024 new jobs were public sector jobs in the US. We've been in a recession for a while. Well, this is very similar to what a lot of people have been saying in 2024. I'm sure a bunch of you in the chat will resonate with this, because you guys were saying this all throughout 2024, which is that all the data we were getting last year was cooked. It was cooked. It was cooked to make the economy seem better than expected. Now, obviously, there's a lot of nuance to that, and we need a lot of more evidence to kind of, I think we'll find out in the next 6 months if 2024's data was cooked, because there is a claim by a lot of people that 2024's data was completely fabricated. None of it was real. We didn't actually have these jobs. We had massive revisions for no reason, et cetera, et cetera. If the economy really does tank in the next 6 months in terms of the jobs data, which doesn't mean the stock market has to tank, it's based on how the Fed navigates it. But if the actual jobs data comes in so much worse than expected, and it's not just because of public sector jobs that Trump is cutting with Doge, then yeah, 2024 cooked all the data. I mean, it'll be pretty obvious. So let's ask that poll in the chat. How many of you thought 2024's data was cooked? Because I'm sure there's a decent chunk of you that felt that. How did you think 2024 jobs data was cooked? Now, granted, even if they cooked it, it helped the stock market. So it helped us avoid this stupid ping pong market going back and forth, red, green, red, green. It's just like, it's, I mean, like NVIDIA, we thought we made some progress. We were at 119 last night on NVIDIA. We're back to 113. I mean, covered calls are like the only thing that are printing in this market, but everything else is crap. Palantir is down 3%. S&P is down 1%. SoFi is down 3%. Hoodie is down 3%. We'll talk about Robinhood in a second. Rocket Lab is down 2%. CrowdStrike's down 2%. Marvell down 17%. Tesla, another 2.9%. Tesla got downgraded by Goldman Sachs yesterday as well. But yeah, this jobs data has not been the best for the market. 76% of you think the jobs data in 2024 was cooked. Well, there you go. Powell speaking on Friday, not tomorrow. Okay, cool. Cool. So we will listen to whatever Powell has to say on Friday. I imagine he'll have to address growing concerns about the labor market. Flex, thank you for the €2 super chat. Amit, is Hood getting into the S&P 500 this month? We will know by Friday, aka tomorrow, on the market close at 5:15 p.m. if Robinhood is going to get into the S&P 500. I'm skeptical that they will. I hope they do. I don't think they will, but we'll see if it happens. But that transitions us really nicely to a quick segment we'll do on Robinhood. So Robinhood yesterday had 392,000 people live playing a game. That game was a trivia quiz game with Scott Rogowski. I don't know who this guy is, but I found out yesterday. And it was great marketing. It was incredible marketing. I was one of those 392,000 people. There was $1 million in Bitcoin on the line if you got all 12 of the questions right. I got 9 out of the 9 questions right. And then on the 10th question, this happened. Number 10, number 10, number 10, number 10, number 10, number 10.
Next question, just a few left.
Oh my gosh.
Q10.
Oh my freaking gosh. Come on.
Company became the first to reach a $1 trillion market cap. The first to reach.
I did Microsoft. I think it's Microsoft, right? It has to be Microsoft. It wasn't Amazon. It was not Apple.
Has repped this company hard.
No, it was Apple.
That's the reason why my first
No, it was Apple. No! 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 It was Apple.
Alas,
no.
Died in 2013, so he never got to see his beloved company reach $1 trillion on market cap, which happened on August 2nd, 2018. I love you, Uncle Al, and I love all of you who answered A for Apple, A for Allen, and A for Apple. Coincidence? Another mystery. Let's take a red delicious bite out of Q11. The penultimate question. Here we go. What year was...
You can just see how upset I was. You can see how upset I was. But the good thing is number 11 and number 12 were when was Doge created? And I would have picked 2016 instead of 2013. So I would have got that wrong. And then number 12 was what was the biggest IPO of 2024? I would have picked Reddit. Apparently it was this company named Lineage. No one knew what Lineage was. Okay. Well, 615 people did, which is why they won the prize. And they split the $1 million in Bitcoin. So they got $1,600 each. But I would have got the last 2 wrong, which makes me feel better about getting number 10 wrong. But I feel like I would have been happier getting number 11 wrong in and of itself, because then that's like a legit question I didn't know. I should have known it was Apple. But I didn't. I thought it was Microsoft for whatever reason. I trusted Bill Gates over Tim Cook. But we got through the first 9, bro. And there were 2 of them that I think I got lucky on. The first one was like, which one of these tickers is not in the S&P? And I picked SPS, and somehow that came out to be right. And then another one was, which was the first company to get into the Dow Jones? And it was between AT&T and GE. And I almost picked AT&T for a second, but I was like, it can't be AT&T. Like, it's just like, I feel like GE is too much of an iconic American name. So I picked GE and I got that one right. The rest of them were really easy. The rest of them were like, which car company has $1 trillion market cap? Rivian, Lucid, Tesla. And 100,000 people got that one wrong. I'm like, oh, okay. So that was kind of it. Who's the chair of the Fed? Jerome Powell. As how much can you contribute to your Roth IRA? 7,000. What is the definition of a penny stock? Below $5. Like those were easy. And we have another quiz today. So I'll be live on the market close again, playing their new quiz for gold subscribers. I think they're giving away another $1 million in Bitcoin. The point is, for investors, this was an amazing form of marketing engagement and user adoption. They're probably going to get a ton of users that sign up to gold over the next couple of days to be able to engage in the new quiz they're doing. And they can do this over and over, dude. They can do this every month, every week. They don't have to give away $1 million. They could give away $100,000, which is nothing to Robinhood. That's like a drop of their money in the marketing department. I mean, they could do this a lot. This is becoming something that I think they can utilize in a really meaningful way. And overall, as a Robinhood investor, I liked it. I think it's one of the most exciting forms of marketing that they ever did. So yeah, this was a good one. Although I got number 10 wrong, I thoroughly enjoyed the process, and hopefully, more and more people continue to engage with this. Crossroads says, would you have gotten the last 2 right? I would have missed those. Yeah, I would have missed both of those. That's why I wasn't too sad about missing number 10. If the last 2 were easy questions, or if one of them had to do with like Palantir or something, I would be pissed off. If I knew I was going to get number 11 and 12 right, then I would have I would have been really mad that I got number 10 wrong. But I wasn't. So, you know, it is what it is. Cool. All right. So that's what we got in the context of Robinhood. Nothing else too crazy there. I'll be live again on the market close talking about what happened or going through the game again with Hood. I think we have some earnings today. What do we have earnings in the morning? We had, okay, let's look at how these stocks are doing. We had Macy's. Macy's stock is down 5%. That's actually not a surprise. It's a retailer that's struggling. We had Kroger. This one, I don't know, but let's see. KR, that stock is down 2%. All right, another grocery store. We had JD.com. That's China. I would say that's green because Baba's green. So let's see. JD is green, up 3%. Money continuing to flow internationally. And then we had Burlington Coat Factory. I don't even know those guys were public. Burlington, they're up 13%. Wow, that's weird. Burlington's up 13% and Macy's is down 5%. You guys have the black screen? Okay, hold on. I think this is what people were talking about the StreamYard thing being stupid. Okay, how about now? Is it good now? Let me see. Dude, StreamYard's got to get their shit together, dude. This whole week they've been... Okay, now you see it, right? Yeah, now you see it. It's just been dumb, bro. It's been Fars Autism, an amateur, bro. It's StreamYard, bro. Like I wanna write a strongly worded letter to their CEO, and I just want to tell them the amount of times they've caused me pain and anguish during my stream, and I just want to let them know the $500 I pay a year for their software is not worth this. It's not worth it. Like, but the problem is no one else is better, bro. No one, like, honestly, Restream and the other, like they're just not as good when it comes to this versus StreamYard. So they're the best we got, but you know, it is what it is. Okay, anyway, so that was the earnings data. We looked at some of the macro data. Let me bring up a couple other points before we get into the market open. Okay, so here's some other pieces of macro that I think are important right now. USD over JPY, the Japanese yen, is the strongest it's been since December 2024. Do you guys remember in August when the Japanese yen started gaining momentum, which meant the US dollar started losing momentum against the Japanese yen, which created the yen carry trade? Well, we're basically back to all of that happening again. But it's not creating a yen carry trade. It's actually creating an economic effect on the US dollar that is good. Why? Because we need the dollar to weaken. And take a look at the dollar right here, 103.91. We're down 2% in the pre-markets on the dollar. This is good. This is not bad. It's really good, actually, seeing the dollar come down. I said at the beginning of the year, we need this thing to get back down to below 100, essentially. I mean, and if we could be around 100 to 102, I think that would be a sweet spot. We're at 103, and I think that dollar is going to continue to fall. Obviously, this will have some implications that are negative on different equities and different parts of the market. For international stocks like a Grab, a Mercado Libre, a Nubank, that's actually going to be really good for their foreign currency exchanges. Now, granted, if the economy tanks, I mean, foreign exchange is not really going to matter, right? Because you kind of need the economy to be well for all those stocks to do well. But still, it's nice to see that the dollar is slowing down and the Japanese yen is going higher. Now, the Japanese bond rate is the highest it's been since 2009, which means investors are actually kind of looking at the potential of Japanese debt. But the question now becomes, is Japan going to raise rates again? They already raised by 25 basis points last month. If they do it again, we are going to see the dollar continue to weaken against the yen, and this might create even more volatility in the stock market. I don't think it's going to create a yen carry trade, but I do think it's going to create some level of weakness in the broader equity markets. I don't think there's a lot of people that are short the yen anymore, which is why we had that like VIX spike to 600% on August 5th, but there will be some weakness on equities, right? Because Japanese yen and Japanese bonds will become more competitive with tech stocks in and of themselves without taking that much risk, because again, you're buying government debt. But the question is going to be, given equities have sold off pretty aggressively already and continue to sell off, Nvidia down 3.3%, how much more do they have to sell off if we were to raise rates? And is there any catalyst from the dollar going down? Also, if the dollar comes down, the 10-year should continue to come down, which should, again, be another argument for why the Fed will cut these rates. But we're going to have to find out over the coming months if that actually happens. So less purchasing power is good right now. I don't think so. Well, it's good for our allies that want to do trade with us. Again, if you're Japan, let's just say Japan, That's a good example. And you are doing trade with the United States and you're having to pay in dollars, and the dollar is ridiculously high. At one point in January, it was $112. Like, you just don't want to do trade with the United States anymore because you're paying so much freaking money to import and export goods. But if the dollar's at 103, at 100, and 95, now you're more likely to increase your trade. So yeah, it's not the best for purchasing power for people that are like tourists, right? Or people that are going to other countries. But in terms of countries doing trade, like, it is one of those things that can hopefully help resolve somewhat of the trade deficit by getting more volumes of trades coming in as the dollar goes down. Which is another reason why it's a really good thing for that dollar to come down. But then again, if Trump has, tariffs across the board, then our country's even going to want to do trade with us, which leads us to our next topic. Let's talk about tariffs. Yeah, as Rob says right here, wouldn't tariffs offset a weakened dollar? Well, that's exactly what I was transitioning to. Correct. Tariffs are likely to offset a weakening dollar if the tariffs actually go into place. And the news we got yesterday, the updates we got yesterday are twofold. Number one, automotive tariffs have been delayed by 1 month to Canada and Mexico. So GM, Ford, and Stellantis, the press secretary said yesterday in their press briefing that Trump talked with the CEOs of all three of those companies, and they pitched him on a 1 month delay on auto tariffs. This is a reason why I think the market bounced at around 2 p.m. yesterday, because basically the White House came out and said, yeah, we're going to delay the auto tariffs that we said we were putting on March 4th. Basically showing the market that this is another administration that is kind of boy who cried wolf about tariffs, because none of the tariffs are actually going into effect. So we got a 1 month delay on auto tariffs, which was a good thing. And that means that, at least for automotive companies, they're not going to have to worry about it for a month. And then with Canada, we got Trump putting out this statement basically saying that, he talked with Justin Trudeau and they're trying to figure out more ways to stop fentanyl. And he said the call ended in a somewhat friendly manner, which to me reads, okay, they're getting close to a deal. They're not there yet. They're probably negotiating the logistics of it. None of them want a trade war, so they're going to announce a deal eventually, but the deal's not coming yet, which to the stock market and to the bond market is basically saying, okay, we're not going to have tariffs on Canada, which is a good thing. And hopefully that also extends to Mexico. So that's the two pieces of news updates that came out yesterday when it came to tariffs. Automotive tariffs have been delayed for a month. This is also really good for Tesla. That's why we saw Tesla go up 5% yesterday. And it looks like the Canada tariffs are going to be delayed as well. The one thing that hasn't been resolved is China. So I think we talked about it a little bit yesterday, but China came out with a nasty statement, and they were just like, hey, we can have a war if you want to have a war. We will be as aggressive as you want us to be aggressive with. And we are going to make sure that we don't easily just capitulate to what the administration wants to do. And as a result, China basically said, yeah, like, we're not going to take off our tariffs if you guys don't take off your tariffs. And if you guys want to be aggressive, we will be aggressive as well. So with Canada and Mexico, I think there's going to be somewhat of an agreement, especially on the automotive tariff front, which has already been proved as of yesterday. With China, I mean, China was acting like they're ready to like launch a nuke if it gets that serious, right? Like they're trying to seem like they're the big guy here. And I don't think we're resolving our tariff dispute with China anytime soon. Now, speaking of tariffs, here's a couple of charts I wanted to show you guys, because I saw this last night and it was really interesting. So China is currently, as the United States is isolating our allies, our greatest allies when it comes to trade, China is signing more free trade agreements. They have already signed in the past 12 months, 25 new countries, and they have 18 more in negotiation. They're not putting tariffs on those 25 countries. They are signing them to new trade deals. Here's another chart that's going to blow everybody's mind. Take a look at this. This was the year 2000 in terms of who dominated global free trade. As you can see, there's a lot of blue on the map because that's the United States and this is as the map is showing the United States or China as a percentage of each country's largest trading partner. As you can see, in the year 2000, 25 years ago, the United States was the biggest ally. If we go to 2024, we see a little bit of a change. We've got red across the board. 24 years later, China is now the largest trading partner as a percentage of the exports and imports that these countries that you're seeing on the screen export or import into their nations. It's now China. It's not the United States. And so this is one of the things that, like, either you are ideologically on the side of the Trump administration that says, hey, tariffs are the way we are going to engage in diplomacy or engage as being a global partner. Also, the Trump administration came out yesterday and they said the way we're going to fund our sovereign wealth fund is by issuing more tariffs, which we can't even issue auto tariffs without delaying them for a month. I have no idea how the hell they think they're going to fund the sovereign wealth fund by tariff revenue. Also, I mean, like, is that their plan for the crypto reserve? Tariffs? Because if that's the plan, I don't think we're getting any stupid crypto reserve. I mean, like, if they think tariffs are going to be the way to fund buying Bitcoin, I don't know, dude. I'm very skeptical about that. But that's what they came out and said. And so in a time when China is basically setting up new free trade agreements, the United States is going the opposite direction and deciding to isolate people. And then here's another chart that I thought was really sad to see, but nonetheless, it's happening. Look at Canadian trade with China growing as a percentage of overall trade between the two nations from 1998. And 1998, it was under 1%. In the year 2020, it's above 6.5%. Why is this happening? Because China is obviously reaching out to Canada. And what are they saying to Canada? They're saying, hey, the United States is being a bully. We got your back. We are happy to have free trade with you. We're happy to have no tariffs. We're happy to engage in a more meaningful way with you. Now, look, Canada doesn't like China. Canada's not a fan of China. Canada actually shares some level of Western values. I know people aren't the biggest fans of Trudeau, and there's obviously a bit more censorship in Canada. I get it, but Canada and China are night and day. Canada is much more similar to the United States than they are to China. Canada's not, doing as aggressive as some of the stuff that China is doing when it comes to the communist dictatorship that is there. However, this is what Ray Dalio talks about a lot. What does Ray Dalio talk about? If anyone's ever read any of his works or like listened to him on podcasts, his number one argument is that empires fall as the collapse of their paradigmatic value structures also fall. So if Canada's value structure is rooted in Western values, freedom, liberty, humanity, we protect the sovereignty of the individual. But then the largest trading partner or the largest ally of Canada, which is the United States, basically hits them with tariffs and economically starts to create a massive rift between that relationship. The sovereignty of the individual, which is the basis for the United States being, in my opinion, the greatest country in the world, the most free country in the world, that Canada also shares as well, starts to get compromised when you have another country that does not care about the sovereignty of the individual, that will kill you if you say the wrong thing. When they're your biggest trading partner, you might start to compromise on some of your values as well. And I don't think this is being hyperbolic or super hypothetical here. It's we've seen this happen time and time again. We're seeing this happen a lot in Africa, where many African countries have China as their biggest trading partner. The Belt and Road Initiative as well, if you've looked into that, you're seeing a lot of countries go into debt because they're working with China. And a lot of those countries, it's going to be very hard for them to embrace Western values if their biggest trading partner is a country that doesn't believe in those values. So I'm not saying that the United States is going to completely ruin the relationship with Canada and China is going to become their number one trading partner, trading ally. I'm just saying that this is what we've seen historically. Like, if we create that big of a rift between Canada and the United States, Canada is going to need cheap goods because jobs are going to depend on cheap free trade. And they're going to go to the biggest ally they can find to give them that cheap free trade. And that might just end up being China, which would be a horrible thing globally, because China should not be having that much power, and they should not be working with one of our biggest allies. We should be working with them. Now, granted, that doesn't mean that tariffs are not the answer, right? I think there's some world where tariffs make sense. The question is just, what is that nuance? And quite frankly, I don't think the Trump administration understands that nuance yet. And I mean, like, and the reason I'm saying that is just because of how flip-floppy they've been, constantly delaying back and forth the tariffs, having tariffs one day, not having tariffs the other day. It seems pretty obvious it's been a bargaining chip more than anything versus an actual strategy. And, as a result, we're going to see if this ends up becoming something that lasts for a long time. So we're going to see. We're going to see if this plays out. Amit, you're saying you're implying other countries don't hold sovereignty in high regard. Well, I'm not talking about country sovereignty. Like, country sovereignty is different than individual sovereignty, right? Country sovereignty, like Ukraine holds their sovereignty in very high regard, right? Which is why they are fighting a war against Russia. They do not want to be invaded and lose their territory to Russia. I'm talking about American individual sovereignty, which is basically the First Amendment, right? The First Amendment is the epicenter of how America believes that no matter who you are, black, white, gay, straight, you're from Alabama, you're from California, your voice still has an equal weighting in a society, which is the whole concept of democracy. Now, in its implementation, is that always correct? Obviously not. But the philosophical value that America lives up to is that every single individual deserves the right to speak, deserves the right to vote, deserves the right to practice their own religion, etc. That's not what we see across the world. Across the world, there is not this universal belief that you as an individual deserve to engage in being the individual that you want to be, because the collective usually overpowers the individual in many parts of the world. Obviously, that happens in China, given party. And so you just don't want those people getting power and then talking with Western allies if we isolate them economically, which again, I don't think we're going to isolate Canada completely economically, because I think we're going to get a deal done. But the ramifications of doing that would be that I think China gets a lot more nuance of a relationship with our biggest allies. We got 3 minutes until the market opens. Real quick, we got Discord looking like they're going to go IPO. We're finally seeing some hot companies say we're going to tap the liquidity of the stock market. Let's get an update on that, and then we'll get into the market open.
It considers a possible IPO later this year. That's according to the New York Times. Discord provides, of course, that popular messaging service used by video gamers and some other groups as well. It grew in popularity a lot during the pandemic. We've had the CEO on a couple of times now. It's valued at $15 billion in 2021 and reportedly held acquisition talks at one point with Microsoft, though no deal then ever materialized. So we're going to keep our eyes on that story this year.
And CoreWeave, remember that name, another IPA candidate, the provider of computing capacity to tech companies like Meta and Microsoft, filed earlier this week to go public. Now, the Financial Times is reporting that Microsoft has abandoned some of its commitments to CoreWeave over delivery issues and missed deadlines. Microsoft is CoreWeave's biggest customer, accounting for 62% of its revenue last year. In IPO materials filed earlier this week, CoreWeave warned that any negative changes in demand from Microsoft would adversely affect its business and future prospects. So stay tuned.
I am staying away from the CoreWeave IPO. I know a lot of you guys asked my thoughts on that. They're a competitor with NVIDIA. If you look at the S1, the CoreWeave IPO is kind of scary. And the reason it's scary is because everything is dependent on Microsoft. 62% of CoreWeave's 2024 revenue was Microsoft. So I think this is going to be a hot IPO. A lot of people are going to be excited about it. It's going to be a $35 billion market cap, raising $4 billion. I'm staying away. And maybe this thing goes to the moon and people make a lot of money off it, and that's fine. But I don't know how you can meaningfully invest in them if Microsoft is almost 70% of the revenue. And they are saying in the S1, any level of weakness within the relationship with Microsoft leads to a decline in the revenue. It's an incredible company. It's one of the best AI providers, AI cloud providers that's out there. And they're growing like crazy. They grew 700% last year. So it's going to be a hot IPO. It's going to attract a lot of eyeballs. But that Microsoft fear is a little bit scary to me. So I'm probably going to stay away from that, but we'll see how that IPO works. I'm happy that Discord's IPOing. I'm happy that we're getting some new companies tap into the liquidity of the stock market. That's probably what we need to see. In this environment, though, it's going to be interesting if these companies can actually maintain the valuation that they get when they end up going public. Okay, here we go. It is March 6th, 9:30 a.m. Another day in the stock market. The markets are now open. All right, wake your ass up and welcome back to the red. We had some green yesterday night. We are back to the red as always. NVIDIA, 112.9, down 4%. NVIDIA was almost 120 yesterday. Back to 112. Palantir, we were at 91 yesterday. We're now down at 87.30. That's down 3%. S&P 500 down 1.3%. That's, again, a pretty nasty drop on the S&P. Falling 1.3% is not, I mean, that's losing 1% on the index is not good. That's down about 1.2%. Robinhood down 2.94%. SoFi is down 2.7%. Abercrombie continues to fall another 1% after falling 15% yesterday. MicroStrategy, that's down 3%. Where's Bitcoin? Bitcoin was at 92,000 last night. We're still at 90,000. All right, so we're holding on to 90, but we were at 92,000 last night. Intel is below 20, just below $20.04, just a little bit above 20. That was at 26 last week. So that one's getting hit. CleanSpark's down 3%. Coinbase is down 3%. Realty Income is down 0.5%. Roblox is down 3%. Costco, that has earnings today, they're down 1.5%. Archer is down 3.32%. Macy's is up 2%. So Macy's a reversal from the pre-market. That is green. NVIDIA, 112. That's below 113. I think I'm going to buy more NVIDIA if we go below 110. That's my buy range now for NVIDIA. Like, let's see if we actually break down. We got there we got there in the pre-markets a couple days ago at 108, but then it immediately reversed. I think a real breakdown in NVIDIA would be below 110. And if we can stay above 110 for the next couple of days, that would be encouraging. But if we actually go below that, I mean, I don't know, 100 looks possible if we break 110, because there's like no support at that level. So we're going to see if we get there, and that would get me more interested to buy at those levels. S&P is down 1.4%, 575, Palantir 88. So now S&P is falling almost 1.5% right here. Robinhood down 3.78%. Robinhood did get a new price target upgrade by Oppenheimer. Not Oppenheimer, Cantor Fitzgerald. They initiated coverage on Hood today for a price target of $69. I'll read the explanation they gave in a little bit, but $69. So they got a new price target from Cantor Fitzgerald, which is good, but still down 4% as we're seeing some market volatility. CrowdStrike down another 1.5%. Marvell, wow, down 19%. My goodness. That one is getting hit. Let's look at the earnings from yesterday. Victoria's Secret down 8%. LendingTree, that one was up 12%. Grindr is down 7%. Rigetti, which is looking a little bit like Regretti. This company did $2 million of revenue. Their market cap is $1.7 billion. I didn't know they were trading at that aggressive of a multiple, but they are. 118 times price of sales. 7.29 on Rigetti. That's down about 10.5%. MongoDB is down 20%. All they did was lower their guidance. They beat by EPS by 100%. So I was really shocked last night seeing them fall 15%, but their guidance was lowered for fiscal year 2026. Zscaler's up 5%, and then Marvell right here is down 20%. Now, probably the reason NVIDIA is down, I just realized, is because of Marvell. All the semis are getting hit on that. Broadcom has earnings today. They're down another 7%. Broadcom is now down 45% from the December high. Broadcom was at 250 at one point. They were at 251. Now they're at 178. So that one got wrecked. SMCI is down 5%. AMD is down 2%. ARM's down 5%. Dell is down 4%. Micron down 4%. Taiwan Semi down 4%. Qualcomm down 2%. And then Broadcom right here down 7%. SoFi below 13 again. And we got SoFi right here below 13. IWM is 4% away from a crash. IWM is, wow, 205. Yeah. 4% down would put them in 20% correction territory, right? 205 on the small caps. I mean, I don't really know how the small caps are even holding above 200, because with all this economic data that's obviously showing weakening in the economy, the benefit is we're going to get rate cuts, but rate cuts don't matter for small cap companies if the economy sucks, right? So like the perfect example is if you're a pizzeria and you're a small company, if people aren't spending their money on pizza because they're afraid, because they're losing their jobs, it doesn't matter if the cost of capital as a pizzeria to borrow to get a new oven is cheaper, because if no one's coming in to buy the pizza, it doesn't matter. So I don't know how IWM does if we continue to get this weakening economic data. By the way, for those that are just joining, the main data this morning that we looked at was that the United States employers cut 172,000 jobs in the month of February. And that is up from 49,000 jobs in the month of January. And this is the highest number of job cuts in a month since July 2020. So in over 5 years, this is the highest number of layoffs we've had in the month of February, 172,000. That's obviously got the markets a bit spooked out here right now. Bitcoin 89.3, that fell from 90,000 pretty quickly. Grab right here down 2.38%. We got some red there. Robinhood again down 2.8%. MicroStrategy down 3.2%. And Palantir still down 3% on the day. ANET as well. ANET, this one. Arista Networks. Yeah. Look at that. 133 to 81. That's down another 4% today. It's ugly, bro. It is ugly. It is absolutely ugly. Amit, what are your debit spreads for Grab? It's 7.5 and 10. Those are the strikes I have on those. 7.5 and 10 for January 2027. I think you might be able to get them at 35 cents. It's really hard to get filled on those at like Grab has to go closer to like 450 to get them filled below 35 cents. My average on them is 34 cents. But I mean, if you put in an order today for 35 cents, they might fill at those levels. It's just a wonky market, dude. It's a wonky market. It's a very, very wonky market right here. CRT is down 7.6%. I don't know what this is. Cross timbers, but yeah, they're down as well. SoFi is down 4%. A lot of these small caps are going to get NVIDIA down 4%, 112.4. That's a new low of the day on NVIDIA. Google, where's Google? Where's the Mag 7? Google is only down 1%, which is good. Apple's down 0.2, Microsoft's down 1, Meta's down 2, Tesla's down 4. There you go. No surprise there. And then Amazon, because the tariffs continues to fall, that's down 2.3%. Did we get a Palantir deal? Yes, we did. I forgot to mention it, given all this crazy macro data we had, but let me pull that up. It's not the biggest deal in the world. It is nice to see, though, 3 deals in a row, back to back to back. But this was the deal. And I believe this is a commercial international deal, which is also really encouraging to see. So EYSA and Palantir partner to enhance mobility application development. EYSA, a leader in comprehensive sustainable mobility solutions, jointly announced a strategic partnership with Palantir in Spain, a leading builder of AI systems. This is a 3-year deal to allow EYSA to integrate Palantir software with the goal of accelerating the development of mobility applications and use cases across its various operational lines, as well as capturing new business opportunities. I'm not going to lie. I don't know what EYSA is. I've never heard of EYSA, but, and I'll go deeper into them later. We'll talk more about it on the daily recap and try to go deeper into what the company does. I'm just happy it's a company in Spain, because we got a company in Europe, Societe Generale, 2 days ago. We got TWG yesterday, which is an international holding company. And then today we get EYSA, which is a company in Spain. So we're starting to see a bit more of the international market at least heat up. And I think that's why Palantir's even doing these press releases, because they're trying to show the market, hey, it's not just US commercial, it's also international commercial. So I think they're being pretty strategic with how they're putting out these press releases. And even if the deals are only like a couple $1 million, like the point is we just need more clients outside of the United States. And it looks like that's happening right now. Palantir right here down 4.4% currently right now as we are read. Wow, HIMS is down 10%. Holy crap. HIMS 72 to 36 after the earnings. I think it was at 42, now down to 36 as well. This one is getting hit. Amit, can you talk about the Trump put? The Trump put is a pretty simple concept. It's the idea that Trump's not going to let the market tank, which I know sounds kind of funny right now, but this is what Tom Lee's been talking about for a while. It's this idea that Trump feels that he is judged on the economy and on the stock market in particular, and as a result, he doesn't want the market to get that bad because he doesn't want to lose in the midterms, yada, yada. And so there's this Trump put, there's this artificial put on the market that will allow us to have a floor that doesn't allow us to aggressively get decimated based on how Trump thinks of his relationship to the stock market. Now, obviously, that hasn't been proven to be true over the past couple of months, but to give context, the S&P 500 now year to date after today's decline is still only down 1.84%. So the Trump put, I don't think goes into effect until we fall at least 7 to 8% on the market, not on individual stocks. NVIDIA falling to $100 is not going to trigger the Trump put. But the S&P getting to 550, 540, yeah, I think that could get Trump a little bit more scared. And then, maybe he tries to pump up the market. But down 2% is just not enough to get the Trump put in effect. What it does do is get the 10-year to go down, which is what, again, Kris talked about this a couple of days ago. This is what the Trump administration wants. They want that 10-year to come down to refinance debt. You need to create volatility to get that 10-year to come down, to get people to buy bonds. And that's what we're seeing right now. I mean, it's kind of black or white, bro. Like, you need bonds to be competitive with equities. And in order to get people to not buy NVIDIA, they have to have a reason to buy the 10-year. And if they buy the 10-year, we get lower rates, we get lower mortgage rates, etc. So there has to be something that gets people to say, all right, I'm not going to buy a company growing at 78% year over year with 55% net profit margins. I'm going to buy US debt. And one of the things that could create that, it's not the only thing, but one of the things that could create it is uncertainty around the equity markets, aka tariffs. And that's what we're seeing right now. VG, Venture Global, yeah, that one's getting hammered. I don't know what happened to this one, but that's down 25%. What's sad about Venture Global right here, what's sad about Venture Global is that they went public in December, right? And because they went public in December, their IPO has been absolutely horrible. I mean, they went public at $50 or something. They've just been decimated, bro. Yeah, they went IPO at 25. Now they're down to 10. So they're down more than 50%. That doesn't give me a lot of encouragement that when Discord goes public, they're going to be able to pull off a great IPO in this market. Unless this is very VG specific. I didn't go through the earnings. Maybe it is. But one of the only IPOs of December is now down the drain. I don't know if Discord going public or Stripe going public is ready to handle this market volatility. I mean, they might be happier if they just stay private versus dealing with employee net worth going down the drain every other day when Trump says something. So we're going to have to see. We're going to have to see how that one plays out. Nebis is down 12%. Goodness, dude. VG missed revenues. Okay, that's why they're down. Look, if you're buying VG, from my understanding, like Kris talks about this one a lot. Steve likes this. Matt, or not Steve. Matt and Kris like this name. This is a energy play, and this is a long-term energy play. So VG is it's not supposed to be a tech stock that flies off of a good earnings, right? But granted, it's down 25%, so the earnings weren't the best. But from my understanding, for those guys, this is like a next decade type of company. Next decade is another name you kind of buy and you hold for the next 10 years as liquefied natural gas, energy overall becomes more important. So if you're buying VG, you have to be buying it with a long-term trajectory and have to deal with these dips. I'm just looking at how it's reacting since IPO, and it's not looking like the stock market is easily giving these IPOs the benefit of the doubt. Netflix is dumping hard right here. Netflix is down 3%. I don't think there's any news on that. That's just a growth stock that's going down. Nebis is down 11%. That one's getting hit. HIMS is now down 8.5%. The only thing that's green is China. That's correct. The only thing that's green is China. Alibaba right here up 2.5%. At least that's what I'm looking at right here. The only thing that is green is China. Even TLT is not green today, dude. That's how you know it's getting a little aggressive. The 10-year, I don't know why it's up today. I feel like the 10-year should be down. That one's not encouraging. It's not really nice to see this market volatility and the 10-year not go down, because now you've got two parts of the market that are moving in the wrong direction. It's kind of weird. I wonder if there's some statement from the Fed or something that the 10-year is reacting to, but you would think that would come down. Europe is green as well. Yes, Europe has been. Yo, what is the right Europe ETF that I can put on the watch list? Can someone give me a good European like defense ETF or something, or overall market ETF for Europe? We got the DAX, right? DAX, that's from Germany. That one's up. Year to date, what is the DAX year to date? The DAX year to date, DAX stock Germany index, that's up. Wow, the Germany, hold on, that's up 15%. Hold on. The DAX is up 15.75%. Wait, okay, so someone explain this to me, because this is I'm being stupid here. If Germany is projecting 0% GDP growth and people are saying Germany's in a recession, why is the DAX up 15% this year? There's got to be a simple reason for this that I'm missing right here. That is, I mean, I know the European defense stocks in Germany are doing very well as well, so that's helping it. Oh, well, I mean, someone said because it's fake. Well, it looks kind of real to me, bro. That looks green. Okay, so we have DAX. Then what else do we have? We have SAB. I think that's a specific defense contractor, right? EUAD. Okay, that's Europe Aerospace and Defense ETF. That one's down 1.5%. On the year, EUAD is up 43%. Well, this shouldn't be a surprise because we talked about European defense companies the other day. So, dude, I guess the spot to be in this year was not NVIDIA, was not freaking the S&P or the NASDAQ. It was European defense and the DAX. Huh. VGK, what is this? VGK is Vanguard European Stock Index. Okay, that's up 15%. I should know this. Dude, this just shows how much we ignored Europe. Dude, the fact that I don't know the leading Vanguard European Stock ETF shows you how much I personally have ignored Europe. I'm sorry. We Europe's on the board now. Europe's on the watch list. It only took 3 years, but Europe, you're on the watch list. VGK, EUAD, and DAX. I'm going to put that on my Robinhood watch list right now. EUAD. Okay, here. Oh, and they don't allow fractional trades. I was going to buy like $1 of all of these. Can I buy $1 of VGK? Yeah, I'm buying all right, I'm buying $1 of VGK just to put it on my thing. All right, so now I own a part of Europe, VGK. Vanguard Europe ETF. And then the other one was the DAX. Yeah, that's on Robinhood too. Okay, I'm buying $1 of the DAX. Here you go. All right, cool. There we go. Dude, that's wild. I mean, I one thing is that I just didn't pay enough attention to Europe, which I probably should have. But another thing is just like America was so exciting with all these high-flying tech names that no one cared about Europe. Well, now that America's not exciting because NVIDIA's down freaking 30%, yeah, we look to what's green, and we see some others that are green. AEX, that's another one. AEX, what is this? Okay, this is not on Webull. I'll have to pull it up on somewhere else. but that one's up. Tesla's down 4.7%. Tesla just got hit. Oh boy, 265. Where's NVIDIA right here? NVIDIA 113. So it's bouncing off 112. And then Netflix right here down 952. I'm not going to buy the DAX or the VGK or anything like that, because at this point, I think there's been a big run. And honestly, I would have to do a lot more research if I like serious buy those names. But I want to keep those as a check to like take a look at how the market's performing throughout the year. I mean, could you imagine if the S&P 500 ends the year down 10%, but VGK is up 20%? Like, that would be a stark contrast between the United States and Europe. And it would be a lot of money that just decided to flow out from here. Dude, that's incredible, bro. I didn't expect that during the beginning of the year. I did not expect Europe to catch a bid, which quite frankly, I mean, it's not that surprising. Like, America was trading at almost, what, a 28 PE on the S&P 500. Now we're at 21. So like, or it was a 24 PE. Now we're at 21. We were expensive. Stocks, individual equities were expensive as well. It's hard to care about Europe when Robinhood's at $65 and it's up 40% year to date, right? Like, the things you're doing are working. So you kind of don't venture out that much. But yeah, when those take a correction, you kind of look at what's green, and it seems like some of the European names are green as well. When are we doing the Germany meetup? That's probably happening in June. More likely than not. We're doing Germany, France, and the UK in June. I don't think we're going to be able to do Italy. Not this time, but I think Germany, France, and the UK is what we're doing in June. So that'll be fun. I'll give you guys the details on that later, but that one should be a fun one. And I don't know where in Germany. I think it's going to be Berlin, if I'm not wrong. No, it's going to be Munich. You know what I'm saying? I have a friend in Germany, and I was saying I would visit them as well while I'm there. I think they're in Munich. So I don't know. We still have to figure it out. Maybe we do both locations, but yeah, it'll probably be around that range. 722 on ASML. That's down 2.34%. So that one's getting hit, even though that one is a European name. NVIDIA right here, 113. Tesla, 266. We're not really getting a bounce. We're just seeing a little bit of consolidation in these red names, but not a bounce. Robinhood's still down 3.5%. It was down 4%, so I guess there's a little bit of a green candle, but nothing too crazy. Come visit Belgium. We'll feed you waffles. Dude, I need to get these Belgian waffles. Neil, my boy couch investor, he's in Belgium. I need to visit him just to try these waffles. We got to do it. Yeah, SoFi's getting hit, down 5%, dude. Goodness gracious. But then again, see, SoFi bounced from like 1250 so many times this week. SoFi does not deserve to be below 13. Like, I feel like this is just stupid. And so you'll have people buy the dip by 1 p.m. It'll go green. And then by 3 p.m. or by after hours, it'll go red. It's just been the same story every single day. Every single day. Rigetti went green. Wow. Shout out to Rigetti. That's incredible. Shout out to Phil if he's in the chat. Phil told me in the chat yesterday, Rigetti would be green by tomorrow. Here you go. Goes from 10% down to green. Wow. There you go. Rigetti is green. That's interesting, bro. That's like, volume is 15 million shares. That's an interesting one that just flipped on its head. The dollar tanked. Yeah, the dollar tanked. We covered that in the morning, 103.9, which I'm happy that the dollar's tanking. If we get it lower, that would be really good. The 10-year not going down today is confusing. I don't get why the 10-year is up. I feel like some Fed official said something, and that's causing the 10, but I don't get it. I don't know why the 10-year is up. Qs are turning around a little bit. TLT is also getting hit because of this. TLT, yeah, that's down. SoFi's down. Tesla's still getting hit. NVIDIA trying to recover back at 114 from 112. It's just this ping pong range of 112 to 117 it's been playing in for the past couple weeks. And now continuing to get hit. Amit, do you think that all this is just hype created to bring the market down? Do we continue declining? How are you looking at this? I'm looking at this as NVIDIA doesn't have a fundamental reason to be down at 114, in my opinion. Robinhood doesn't have a fundamental reason to be down at 45. I think a lot of this is caused by uncertainties in the market, and those uncertainties are creating an environment where people don't feel excited to invest. Now, one theory is that Trump is creating these uncertainties to get the 10-year to come down. That's one argument. The other argument is that Trump doesn't really care about uncertainties causing the stock market to come down. He genuinely cares about fentanyl and tariffs And the byproduct of that is uncertainties, whether Trump cares about it or not. And so because he's so gung-ho about it, the market's simply reacting, which means the market's not really calling his bluff here. Because if the market thought Trump was doing this just to create hype to get the market to come down, maybe people would keep buying stocks. I think the market genuinely is afraid of not knowing after 2 years of back-to-back 20% gains on the S&P, if we can sustain the level of multiple expansion we've seen, given this amount of tariff uncertainty. And that's why I think the market's selling things off. But I think it's stupid because eventually the market will realize that these names are so aggressively sold off. Not everything. There are some stocks that are incredibly expensive still, but an NVIDIA is just not. And I think one day the market wakes up and says, yeah, we're not going to buy the 10-year, we're going to buy NVIDIA. But that might not happen until Trump makes it pretty definitive that the tariff trade war is over with and that he's gotten what he wanted from the fentanyl stuff and there's border protection, yada, yada. That might take 4 months. That might take 4 days. That might take 4 years. I mean, I don't think anyone knows. I don't think anyone knows. Tim says, admit random, but have you ever bought a penny stock? Yes, which is why I got that question right on Robinhood when they asked how many dollars below a certain amount is a penny stock. A lot of people picked $1 there because they saw the word penny, but it's $5. I bought my first stock was a penny stock. I told you guys the biotech I bought back in 2020, the one I established a real position in, that was a penny stock. And, I thought I was going to become a billionaire off that, but that didn't happen. So yeah, I've dabbled in my fair share of penny stocks. So that's why when you guys mention them in the chat, I'm just look, it could go to the moon too, but it's one of those things where you really better have a thesis on it, bro. Because some of these names, they could get hit really badly. Big Bear is technically a penny stock because it's below $5. That's down 8% now, $1 billion market cap. It's a little bit more than a traditional small cap, which tends to be below 500 million, but they have earnings today. So their earnings, and Big Bear is more of a legit company, even though it trades like a meme stock. They have government contracts, etc. Their earnings today will be important to see if they continue to trade like a penny stock. Amit, what do you think about AMD? I would just rather buy NVIDIA. I get why people are bottom fishing here, though. I understand why they're taking a chance on AMD, but I'd just rather buy NVIDIA. I think it's so obvious that if you're going to play in the semis, now that NVIDIA has collapsed from 140 to 110, the answer is NVIDIA, in my opinion. I don't think AMD is so unbelievably undervalued and egregiously cheap compared to NVIDIA that AMD has a tougher rebound or a better rebound, because that's the whole point of picking between the first and second in a group of a bucket of stocks, right? You pick the second one because it's worse than the first one, aka AMD versus NVIDIA, but you think they're going to grow faster. You think they're so beat up valuation wise that they can have a faster rebound. I think NVIDIA gets to 140 way quicker than AMD gets to 125. And someone can clip that when I'm wrong about it, but I think the NVIDIA rebound is easier than AMD. But I get it. I get why people are buying AMD. I don't think it's bad to buy this dip here. I just personally, because I already have an NVIDIA position, would just keep DCAing into NVIDIA. Invest in gold. Well, speaking of gold, dude, gold is continuing to rally. Gold is gold's at 2,900 an ounce, bro. Goodness gracious. The best trades of 2025 so far have been gold and European defense, which is wild, right? Gold because people are afraid, and then European defense because people are seeing defense stocks in Europe start to catch a bid as Europe starts to spend more. And then overall VGK in Europe, right? So I guess European defense and gold have been the best trades of the year. And there's some individual, Robinhood's still up, 30% year to date? How much is Hood up? Or 25%? Robinhood, yeah, still up 20%. I mean, it's not like that's been a bad trade or anything, but in terms of some of those defense names and gold, those have been the kind of big movers of 2025. Swedish SAAB, Defense and Aerospace. Is that on Robinhood? SAAB. That's up 60%. SAAB. No, that's not on Hood. Hood needs to list some of these European stocks, bro. SAAB. Wow, dude, that's up a lot. Holy crap. European defense, huh? All right, so how many people have European defense as their top 5 position? Whether it's SAAB or VGK or Rheinmetall. I'm definitely saying that wrong. I don't care. I cannot say that freaking word. I can barely say Marvell. You think I'm going to say Rheinmetall? How do you say this thing, bro? Now I want to know how to say it. How do you say this thing? RHEN. How do you say this freaking thing? How to say? I just hate words, bro. I really hate words. Okay, I found a YouTube video. Hold on. Let's see.
Trump promised to bring.
Oh my God. Why do I have an advertisement here, bro? Hold on. How do you say words? How do you say this shit, bro? I hate when I can't say this stuff, but I know I'm getting it wrong. Okay, how to say. All right, let's see. It looks like a lot of you guys, by the way, have this in your portfolio. So for the Europeans here, that was not a bad move.
It's pronounced as Rheinmetall.
Rheinmetall. Okay, boom. I got it.
Rheinmetall.
Rheinmetall.
Of course, you're tempted in English to say it as Rheinmetall or Rheinmetall. Rheinmetall.
Okay, so Rheinmetall is also acceptable. Rheinmetall or Rheinmetall. Okay, Rheinmetall. There you go. Rheinmetall. That's an easier one for me to say. Rheinmetall. So, yeah, Rheinmetall doing its thing. I wish you guys told me about that one, but thanks for nothing. Thought we were supposed to be a community here. But yeah, so European defense, I mean, the comments I'm seeing right here in the chat, the ones that are exposed to it, it's definitely got to be helping the portfolio. Yeah, there's always a bull market somewhere. There's always opportunity somewhere. And in this case, it was Rheinmetall. Arnie says neither Europeans tend to have them. Well, that's also an issue, right? If you're in Europe and you didn't trust Europe. Shout out to Arnie, by the way. Arnie is back in hood, for those that didn't know. Arnie established the hood position, I think, last week at like 42, 43. So he's back in hood. He's also in Tesla. For those, I know a lot of people think Arnie's all in Palantir, and he was for like, I don't know, a year and a half, but he is back in hood in Palantir. So hood, Palantir, or back in hood in Tesla. So hood, Tesla, and Palantir are his portfolio. I know a bunch of you guys have been saying it. I'm just trolling. I know a bunch of you guys have been mentioning it. I just didn't really take a look at it in January. I really had no idea what you guys were typing every day in the chat. Rheinmetall. I was like, what are these guys typing, bro? Like, what is this? Like, where's, like, we're looking at NVIDIA. They keep typing this Rheinmetall thing. And then NVIDIA tanks. And I'm like, what is this Rheinmetall thing, by the way, that everyone's been talking about? What is this thing? So, well, it's doing well. It is doing well. The best gold ETF is GLD. I think GLD is the easiest proxy to gold. There's also gold miners, but the best gold ETF is probably GLD to get the exposure. Okay, let's get an update from the suits and see what they're saying, how they're interpreting this market. Again, that jobs data this morning we got was not good. We'll see how people are reacting to that. Lost 172,000 jobs versus 40,000 expected. And let's see what else we got going on here.
One of those big moments we've been waiting for in the
Improvements in mortgage apps may be coming in time for spring, right?
20%. Doug Yearly did say, look, the last couple weeks are good. I kidded Doug that we're going to start playing week to week, but Doug is, I'm talking about Toll Brothers. Lennar is saying that they're doing well. Toll Brothers is saying they're doing well. So if you care about doing well and have a good spring selling season, may I suggest that Toll Brothers has suffered from multiple compression that I've not seen in ages. But if you do get the Canadian lumber story for a company that sells at 7 times earnings, it's going to go lower.
Jim, you mentioned this, but I want to come back to it because I'm sure you're going to be focused on it. Broadcom, AVGO.
Yeah, hot ton
I mean, the stock is down 22% now for the year. Remember, it was a part of the $1 trillion market cap club.
Oh, it's been in my charitable trust.
It was one of the great performers for quite some time. What do you think after, we're going to get earnings? What do we think?
I think Octane's a tough guy as a CEO. Now, 4 months ago, he was saying things are good. I think he's going to say things are good. I think he's getting a lot of big contracts. They do that custom-made chip that you need for if you're going to try to save money and you're a hyperscaler. I think Octane, not that he's necessarily going to come to the rescue of the market because he doesn't care about that. I think he's going to put up good numbers and he's going to say good things. I'm out there saying that.
Speaking of Kramer, I mean, Palantir was at $91. Palantir is now at 85. At 5:07 p.m., we had our boy tweet, Palantir's back. Can't keep that one down. I think he knows what he's doing. Dude. Like, it can't be this obvious to just be like, yes, it's definitely going to come back up and tweet that, and then the thing tanks. It's like every freaking time, but it's happened at least 5 times in the past couple months now where Palantir was down, came back up, gets a little bit of a green candle. Kramer's like, yep, we're back to action, baby. And then it goes down. So it is what it is. But every single time, that's how it plays out. TLT is still down. SoFi is getting a little bit of a green candle. It looks like we have intraday bottomed at 9:45. We're at 10:02. SoFi hit a bottom of 12.73. NVIDIA hit a bottom today of 12.30. Same time, 9:45. Right? Am I looking at? Hold on. Yeah, 9:45. Tesla 264 was their bottom at 268 around the exact same time, 9:44. It looks like for now the algos 15 minutes ago created a short-term intraday low. We're going to find out, obviously, if that gets violated. Palantir as well, 84.21 and 9:45. That's at 86. Grab was at 467. That's at 470 now. Robinhood's at 47.55. That was at 45 at 9:45. So we continue to see a upswing on some of these names. Bitcoin should be probably in the high 89s. Bitcoin 90. There you go. Yeah, Bitcoin as well, moving with that same 9:45 low. I'll be live for the Robinhood quiz. Yes, at on the market close, I'll be live for the Robinhood quiz. All right, sorry, at 4:45. Yeah, 4:45 in the market close. I'll be live for that. Okay, so Bitcoin's at 90 right now. SoFi's getting a bid right here as well. You're seeing green across the board, even though everything is still red. SMCI still down 4%. Where is NVIDIA? Broadcom as well. NVIDIA 113. All right, so that's trying to get back to 114. The problem with Broadcom, in my opinion, here is that they've always been somewhat independent of NVIDIA, but then a lot of the times the market uses them as an NVIDIA proxy. And I think today what Hawk Tan will say is going to be a continuation of their earnings preview in Q3. Remember what they said? They said they feel there's a $90 billion opportunity in AI over the next 4 years. That's what really got the market excited. And they put up the growth numbers to suggest that they were going to capitalize on that $90 billion opportunity. That's what really got them up to 250 back in, I think it was December 15th, around mid-December. But if NVIDIA expectations have now gone down, even though their earnings haven't gone down, which is a good thing because that means they can beat expectations really well, maybe the same story is going to play out on Broadcom. Also, Broadcom's down a lot from the highs, so maybe there's a beat and raise today and the market brings it up, or it continues to decline. I don't know what's the floor on Broadcom. I mean, if I had to guess, I would say around 150 because that's where it formed a base back in July of last year. But we're going to have to see on earnings what happens there. Is Lutnick on CNBC? Hold on, let's see. Is he on CNBC? Let me pull that up if he is. He did say we would get a tariff deal with Mexico and Canada yesterday. That didn't end up happening. Yeah, he's on CNBC. All right, here we go. We are going to be listening to this guy for the next 4 years when it comes to tariffs. Let's see what he says today.
Front running those tariffs, as Rick said. Let's get some reaction from the White House on President Trump's latest tariff moves. Commerce Secretary Howard Lutnick joins us now. Secretary Lutnick, welcome. Good to see you.
Great to see you.
It's been a bit of a roller coaster. So we'll start with the latest news, which is the breathing room that President Trump is giving to the automakers a month now for those tariffs on Mexico and Canada. Why 1 month and why just the automakers?
So it's not likely to be just the automakers. I mean, the president is going to decide this today, but he's talking about it. But I think it's likely that it will cover all USMCA compliant goods and services. So that which is part of President Trump.
Wait, hold on. That's a one. Wait, is that why the market's bumping right now? Is that why we're getting it? Did he just say all tariffs will be delayed for a month? I think that's why we're mooning right now. Like, mooning is a little bit too aggressive word, but I think that's why we're getting a little bit of a bouncy bounce. I think it's because he just said all tariffs are delayed for a month. That was it. I think that's the reason.
Trump's deal with Canada and Mexico are likely to get an exemption from these tariffs now. That this comes from that Canada has done an enormous amount. They've offered us an enormous amount of work on fentanyl, and so is Mexico. Matter of fact, the president and I are speaking to our Mexican counterparties later today, this morning. So we think this is likely. The likely outcome will be sort of in the middle. So USMCA compliant goods and services will be excluded, and everything else. So if you think about it this way, if you lived under Donald Trump's U.S., Mexico, and Canada agreement, you will get a reprieve from the tariffs now. And if you chose to go outside of that, you did so at your own risk. And today is when that reckoning comes.
Now, you will get a reprieve now for 1 month, or you will get a reprieve altogether from these new tariffs?
Well, the reprieve is for 1 month. Remember, the month now is about fentanyl and about the border. So they've been working hard to close the border, but we're not seeing the reduced number of deaths, of autopsy deaths from fentanyl. And the president is just right on that topic. He is going to protect American lives, and he's being very, very tough on it. But let's face it, if you're not tough on protecting American lives, what's the point of being the president of the United States? He is so strong and focused on protecting American lives, and he's going to crack down and make sure this fentanyl is not coming in. That's why he's raised the tariff on China. Remember, in 2019, President Xi offered Donald Trump, when he was president, that he would put the death penalty on anybody who made the fentanyl ingredients. And the president is looking to get that in place, stop these ingredients and stop fentanyl coming in. Now, April 2nd is when we begin our reciprocal tariffs. So if you think about it, what he said was, okay, between now and April 2nd, I'm just going to give USMCA, I'm going to set that aside from these tariffs, but just for this month. And then on April 2nd, it's not that this reprieve starts, it's that on April 2nd, the reciprocal tariffs start. How you treat us is how we expect to treat you. And you have no idea what Canada does. I mean, the dairy products and all this other stuff, it's got to end.
So, and I have a lot of questions about April 2nd, but first on the fentanyl, you said that he wants to see fewer deaths. Is that the metric here for when these tariffs end? I mean, because according to U.S. Customs and Border Protection agents, only seized 43 pounds of fentanyl at the Canadian border last year. So is that a metric? Do we want to see that go down to zero? How are you judging when they've done enough?
Well, how funny is that, right? Like if I seize less, does that mean like the stuff they haven't seized hasn't gone through? I think autopsy death, as horrible as that is to say, should be the statistic.
But a lot of it is Americans smuggling it over, right? It's not just Canadians.
Well, look, crooks are crooks, but I got to stop the flow across our border. We've got to stop the flow that has these ingredients being made in Canada and in Mexico coming into our country. We've got to close the border, which we're doing a better job of, obviously record low numbers, but we need to see fentanyl deaths decline. So that is the statistic.
So are we looking at daily autopsy deaths? Like, how do we do that? How as a business do you figure out what that's going to look like and when it ends?
Look, these are the right questions. She's asking the questions to develop the frameworks and metrics by how the administration judges success or failure. I don't really think Lutnick's giving the best answers, but these are the right questions to ask.
Well, I think what you see is that this month, my expectation is the president will come to the agreement today, and hopefully we will announce this today, that USMCA compliant goods will not have a tariff for the next month until April 2nd. That includes the autos, and the autos were the lead in getting this deal done. But also Canada and Mexico have done a good job offering us ever more work to prove to us they're going to cut the fentanyl deaths. And then April 2nd, we're going to move into the reciprocal tariffs, and hopefully Mexico and Canada will have done a good enough job on fentanyl that this part of the conversation will be off the table, and we'll move just to the reciprocal tariff conversation. But if they haven't, this will stay on. Black and white, this will stay on. We need to protect American lives.
Is there any discussions with China about what they're doing on fentanyl ingredients and deaths, which I know has been a problem?
Well, President Xi offered President Trump in 2019 that he would put the death penalty on if you made the ingredients for fentanyl and opioids. He offered it in 2019, and he didn't do it. And the president has heard that and said, I'm looking for that. End fentanyl ingredient production in China. Just end it, or you're going to pay 20%, and they're paying 20%. So it's a win-win. If they stop, great, we save Americans. And if they refuse to stop, right, then the cost of their refusing to stop gets higher and higher and higher.
100%, but there's also a cost for American business and American jobs and American farmers. I mean, last time around, 2018, 2019, the Trump administration had to subsidize the farmers. Well, guess what? China just slapped 15% tariffs on U.S. agriculture. So is there going to be payments to them?
No, I think what's going to happen is when you get to reciprocal tariffs, you're going to see the most positive, explosive benefit to American farmers in the history of America. I mean, that is what's coming. We are going to use our tariffs to knock down the protectionist walls of the world. We have let everybody into our market, and they have blocked us, all of these markets. I mean, we had Modi in from India, and he was bragging he has 1.4 billion people, and those 1.4 billion people won't buy a bushel of American corn. This is going to end, and Donald Trump is on it. And on April 2nd, he is going to start smashing down those walls and letting our American farmers thrive in the world. They have Stockholm syndrome. They've never been able to actually export the way they should. Our farmers, our ranchers, right, our fishermen, this has got to end. We need to be able to export. And we're going to break the walls of all these countries that protect themselves and let us in. We let you in, you let us in.
100%. But the problem is then they go into retaliation mode. So we sell a lot of agricultural products to China. It's an important market for our farmers. And now there's higher tariffs. So it makes our farmers less competitive on the world stage. And if we go into more tariffs, then they will just do more back. And I guess where does that end up?
Okay, look, this month is about fentanyl, and the president is very, very focused on saving American lives. First and foremost, this month, the month of March, is about saving Americans' lives from fentanyl. But come April 2nd, we're going to focus on breaking down these barriers. So it's a couple of weeks away, but we are going to smash down the barriers of trade. America has left itself wide open. We have a 2.5% tariff, and even the VAT is 20%. It's amazing. India has almost 50% on average. China over 50% on average. I mean, you've got huge tariffs, non-tariff trade barriers. And here's what I learned yesterday. You know what the Chinese do? When the government buys products, they pay 20% premium to the key companies so they can subsidize them, so they can attack us. This stuff is going to end, and Donald Trump is on it, and he is going to end it. And America has never seen the growth that it's going to feel as Donald Trump rips down the barriers that these other countries have put out, rip down these walls, and let our farmers and our ranchers and our fishermen thrive.
So, Secretary Lutnick, then, what are your expectations on April 2nd, given the data you're taking in right now? How significant are the tariffs going to be in your mind at this point? Do you have a sense as to what it's going to look like, more broadly speaking, here with all of our trading partners?
Well, if our trading partners did nothing, then obviously, let's say a trading partner has a 20% tariff rate on us, then I guess we would have a 20% tariff rate on them. And they won't go up because if they go up, we'll go up. And my expectation is it starts high and then it starts coming down. But most importantly, those trade barriers come down, our ability to export completely explodes. And then what you're going to see is massive importing of factories, production. I mean, the scale of people going to come and build in the greatest economy in the world is the likes of which no one's ever seen. When the president says the golden age is coming, I mean, I'm meeting with these companies. They're all coming. The big car companies, they're all bringing it back. Everybody's going to do manufacturing here. The growth rate in American production. Remember, every trillion of investment in America is 1 point of GDP. And he's already brought in, he announced the other day, 1.3 trillion, and the factories are coming, and it's going to be massive.
If I could come back for a moment just to follow up on the MCA compliant component here of overall trade. Do you know what the percentage is in terms of Mexico and Canada from our imports that is MCA compliant?
I think it's over 50%.
Okay. So at least 50% for the next month will not be receiving that 25% tariff of imports from Mexico and Canada.
Well,
sort of fair to say that?
I said that was just a cuff. I mean, there are lots of people who know the precision, but I'm on live with you, so I'm just giving you my best guess.
Yeah, understood. I wanted to follow up as well. There's a Wall Street Journal story today, Secretary Lutnick, on the background of the talks, trying to avert the tariffs from Mexico and Canada, and they refer to talks between their negotiators and you as well. And they said they struggled to make their case to President Trump through what they call a phalanx of intermediaries. And they say at times those intermediaries, and I think they're referring as well to yourself, perhaps, are unsure what the president wanted. Can you respond to that? Are you unsure of what President Trump wants?
Look, I love when the fake news comes up with nonsense just to sell a newspaper. I mean, you've got to be kidding me. The president is he loves to communicate. He calls everybody all the time. I speak to him all the time. You've got to be kidding me. The president knows exactly what he wants. We know exactly what he wants, and our job is to try to execute exactly what he wants. But anybody says that his advisors don't know what he's thinking are silly.
So you communicated fully with your counterparts in Mexico and Canada, for example, exactly what the president wants, I assume.
Like yesterday and the day before yesterday, of course. Like, come on. I mean, this is so silly. This is really important stuff. And to actually have a news reporter come up with such nonsense like that, I mean, how much time do we really have to spend on things that are just really just pathetic?
Well, let me ask you this, Secretary Lutnick. Does the president want a rising stock market? Because we do have stocks 6% off the highs, and confidence is being shaken here a little bit around business. I know you guys wanted lower interest rates, and you're getting that, but kind of for the wrong reasons, because now there's worries about growth and potentially recession because of a trade war.
The president wants American growth and American prosperity. Okay. And the fact if the stock market goes down 0.5% or 1%, it goes up 0.5% or 1%, that is not the driving force of our outcomes. Our outcomes are driven by, we want factory production in America. We want employment to explode in America. We want training for the new AI industrial revolution to happen in America. We're going to bring factories back to America. We're going to rebuild Michigan. We're going to rebuild Ohio. Why do those auto plants go to Canada? Why would we have auto plants go from Michigan to Canada? Why is that in our community's interest? We want to rebuild steel and aluminum. Right. The president is focused on rebuilding America, and you are going to see growth in America. You're going to see an interest rate when we balance the budget of the United States. You're going to see interest rates drop 1% or more. You're going to see the stock market explode. And if it doesn't do it tomorrow, that's because people just don't understand that they should be betting on Donald Trump. If I were them and I were your viewers, I would understand the long-term trade of Donald Trump is you bet on him, and he is a winner, and he is going to win for America.
Well, we are going to obviously be able to find out, specific to auto manufacturing, because you've mentioned it a number of times. I mean, there are plenty of automobiles manufactured in this country, not just domestically by Ford or GM, but also many foreign companies as well, Secretary Lutnick. And they have supply chains that they've spent years sort of figuring out where things should be made to try to be, my sense is, as competitive as they can be globally. Do you think by moving everything back as you describe it, that they're going to be able to be competitive globally? Aren't prices ultimately going to actually have to rise?
I think if you want to buy things from other countries and you want to bring it into America, then the price is going to rise. But if you make it here, then of course the price won't rise. So make it here. Make it here. How hard is that to say? Just keep repeating it to yourself. There's no tariff if you make it here. So TSMC, the biggest chip manufacturer, says, okay, I'll make it here. You're going to watch everybody come to that realization. Apple, who builds it all in China. Why are they building it all in China and giving us our iPhone? Why don't they make it here? You know,
Well,
they used to say we don't have.
It's cheaper.
One answer, Mr. Secretary, is that wages are lower over there.
And now there are robots who can do it. You're going to see robotic production of iPhones and the jobs that are going to be created. People who build those factories, the mechanics who work on those robots. These jobs are going to be millions and millions of those jobs. These are great.
You guys are thinking what I'm thinking, right? You got there is no way in hell he just answered robots against a question about labor costs in China. There's no way that happened, right? Like this is not just me thinking that, right? There's just no way he said robots are the answer.
Building it all in China and giving us our iPhone. Why don't they make it here? You know,
Well,
they used to say we don't have.
It's cheaper.
One answer, Mr. Secretary, is that wages are lower over there.
And now there are robots who can do it. You're going to see robotic production of iPhones and the jobs that are going to be created. People who build those factories, the mechanics who work on those robots. These jobs are going to be millions and millions of those jobs. These are great, high-paying jobs, and you don't need a college education to do it. This is the recreation of tradecraft in the United States of America, and Donald Trump is on it. He's bringing it back. And you are going to see Apple. Why did Apple say they're going to invest $500 billion in America? Because they're going to build the robots to build their iPhones in America.
That's the first time.
But if Apple builds the robots to build iPhones in America, those are not jobs for human beings. Like the argument in and of itself does not make sense, even if he thinks Apple's investing. If Apple's making robots, where's the jobs? Those are quote unquote jobs going to robots. Like, I'm sorry, guys, but this makes no sense. Like nothing he's saying over the past 2 minutes makes any sense.
I've heard you, Mr. Secretary, merge the notions of reshoring and robotics. That somehow this is going to be two parts of the same story.
That's where it's coming from. I mean, how can Apple move? Like if you look at Foxconn, who makes iPhones, right? They have 2.5 million people who work for them in China. And of course, you know, the worst statistic I can tell you about that is they have the highest suicide rate of any company in the world because they have these people live there and work there and live there and work there. That's just not an American way. How can we compete with that labor? The answer is robotics are going to do it better and cheaper. And the key to robotics is going to be American AI and American intuition and the American technology. It's all coming here. It's coming here now. And we need the people to fix them, to build these factories. Right. I mean, the scale by which these great jobs are coming to America is going to be amazing.
So, all right, because robots usually replace people, but you think that ultimately it's going to create jobs.
I'm sure of it. You're going to see my department is going to come out with a plan that has a guarantee. If you go into the training program, you will be guaranteed a job making more than $125,000. And we're going to have 5 million jobs available. And those jobs are going to be offered by who? By Apple, by TSMC, by SoftBank, by OpenAI. They all need to build their factories, maintain their factories, and operate their factories. These are a different kind of electrician, a different kind of plumber, HVAC people, a different kind of mechanic. These are the people who work on high tech like airplanes. And there's going to be millions of these jobs, and these jobs are going to make America great again from its workforce rebuilding. Automakers are going to come back. Everybody's coming back.
T-shirts,
this is the golden age,
towels,
and you're talking about it today.
Are we going to make all those things in the United States? None of them are made here. TVs, electronics.
Why did we stop? Because we entered into an illogical world of low tariffs here and high tariffs there. So everybody could go find the cheapest place in the world. I mean, think about it. Why would a factory that was making cars in Michigan move to Canada? Because I tell you why. Because they did it because there weren't unions in these locations. We harmed American workers in exchange for what? The prices of cars didn't come down.
Yeah.
Donald Trump understands it. He's going to bring it back.
I don't mean to, I know you got to go, but I wanted to ask one question about something you've said previously. A number of investors have brought it to my attention. The VIE structure, this involves China as well. It's this tax efficient structure, so to speak, that companies such as Alibaba used, for example, where they established in a tax-friendly jurisdiction, the Cayman Islands and things of that nature. I believe you said previously you guys are looking at it. I'm just curious if that's the case and whether there's any update on that.
There are so many tax scams. I mean, how about Ireland has a $60 billion trade surplus? We're running a $2 trillion deficit, and they have a surplus. Why do you think? Do you think the Irish 5 million people are doing something? No, it's all tech companies and pharmaceutical companies who figured out a way around our tax program, and they stuck their IP there. How about every ship you've ever seen? You ever seen a commercial vessel with an American flag on the back? You see Liberian flag or a Panamanian flag because they're not paying tax in America. We are on it. We are going to fix it. We are going to make it fair. We're going to take the waste, fraud, and abuse out. We're going to get these tax scams out. People are going to pay American fairly, and we are going to balance the budget for the United States of America.
I was going to ask what you're going to do with the tariff revenues, whether that could go into funding the Sovereign Wealth Fund.
No, it's going to reduce the deficit and balance the budget of the United States of America.
And replace
it's the External Revenue Service. Say External Revenue Service. We all have this, we think we're supposed to pay taxes on the Internal Revenue Service. How about we replace it the way Donald Trump thinks about it with the External Revenue Service? Let the people who live off of our economy pay, and we'll pay less. No tax on tips, no tax on overtime, no tax for our Social Security. I mean, come on. This president is on it, and he is going to deliver.
Finally, Secretary Lutnick, I mean, we know you well. You've come on so many times as the head of Cantor, and I do wonder what your conversations are like with fellow CEOs right now who, I think saw a really big spike in confidence after the election. They were excited about deregulation. They were excited about tax cuts, and now they're wondering about this trade war and what their cost structure is going to look like and what they're going to have to do with jobs. How are those conversations going?
Those conversations are much more optimistic and positive than you think. They said, we can bring it back. The automakers, we can bring it back in 6 months. People say, okay, can you give me accelerated depreciation? And the answer is the president has said he wants to give accelerated depreciation. He wants to figure out how to help companies bring their factories back to America. So it's a win-win, right? If they bring their factory back, we get the work here, and if they don't bring it back, then we get tariff revenue that pays off our deficit. So we are going. You see, I speak to all these CEOs all the time. It's sort of all day, every day. I'm either speaking to a foreign trade minister or a CEO, and we're always talking about how to bring it back. Accelerated depreciation is one. And then other ways that we are working on with the president to come up with ways to incent people to build your factory here. And we're going to come up with a lot of cool ways to do it. That's why I talk to all these companies, because we go back and forth figuring it out. But I tell you what, this is going to be exceptional and extraordinary for American growth. And that's what the president is focused on, American growth and making sure we have no deficit, because if we have no deficit, you're going to get 10-year interest rates more like in the 2.5% range, and you're going to have mortgages rates come smashing down, and we're going to have energy prices come smashing down as we drill, baby, drill. And people just don't understand the power of America in the hands of Donald Trump is going to be amazing.
Well, we've seen oil prices come down, rates come down, mortgage rates start to come down. I mean, it's starting. Thank you, Secretary Lutnick. We certainly appreciate the transparency and all the time.
All right. I love spending time with you. Thanks.
Thank you.
Okay. We're going to have Kris on in a couple minutes and get his take. He lost me when he said the robots. Completely lost me. I think everyone here can be objective enough to realize what he said in those final 7 minutes made no sense. The question was very simple. If you bring all these manufacturing jobs to America, won't things get more expensive? The example he used is cars. He said, no, the reason it's already expensive is because when you import something, the cost of importing is what makes the item more expensive. But if you produce it in America, it's not expensive. That is not correct. Like, That is not correct. It is more expensive when you make something here because the cost of goods are higher than the cost of importing something from China because the cost of goods are so much lower there. So then one of the hosts says, well, wait a second. The reason we create stuff in China is because labor costs are low. And his response to that, which honestly, the response should have just been Americans should pay more for American products. Americans should be happy to pay more for American products. And if we bring over all these goods to America, we have economies of scale, which means unit costs come down. That's not the best answer, but it's a little bit more believable than what he said. His response was, well, the robots. The robots. There are no robots. I'm invested in 2 private robot companies. They're not deploying their robots yet. Tesla is not deploying their robots. Like, if you want to make an iPhone in China, there's probably some robotic arms that are helping you, but the majority of it is people individually assembling the iPhone. And that's going to happen in the United States as well. So if the response to outsourcing of jobs back to the United States, so the insourcing of jobs internally, is that robots will get the cost to come down, it's believable to an extent until you realize if the robots are making the jobs or the iPhones, there are no jobs. Exactly. It's like in debate, we call this a double bind, right? You're screwed on both sides of the argument. So the first side of the argument is that, well, if you make it in America, it's cheaper. That's just wrong. The second side of the argument is, well, if the robots create the products, everything gets cheaper. Okay. That's correct. Yes, robot automation leads to cheaper goods. The problem is it leads to less jobs because if the robots are creating the phones, the laptops, the TVs, the t-shirts, etc., how are the human beings getting those jobs? This one was one of the worst interviews I've seen by Lutnick. This one really made me lose a decent chunk of confidence in terms of how they're thinking about the overall tariff situation. Kris, good morning. What was your reaction to that?
Either this guy is gaslighting the shit out of us or he is a fucking retard. Like, listening to that was so fucking difficult for me because the entire time I'm just like, wait a second. Like, you want to bring back manufacturing? Like, I understand to a certain degree some high input value manufacturing, but bro, there's a reason why there's certain things, like certain jobs that get exported. Like, we don't have to deal with all the pollution. We don't have to deal with all this extra stuff that usually goes in with heavy manufacturing. I mean, and the cost of basically the turnaround on some of these products that do get like manufactured overseas, they end up developing faster and faster and our costs go down. Like, look at a TV. I think Dougie did a great job. It's like, if it was still TVs being manufactured in the US, we would still be on CRTs. Okay. Like, those big ass TVs.
Yeah.
No,
Yeah.
you basically outsource the things that can be made cheaper in areas that don't add a tremendous amount of value back to us. And you end up focusing on high skill, high manufacturing stuff. Like, I understand some of the return, like, dude, that was so difficult, man.
So hold on, Kris. Let me say the biggest elephant in the room of people that will bring an argument back. They would say, if America wants to not be dependent on other countries, inevitably, either it's today or 20 years from now, we have to bring back manufacturing to the United States. What is the response to that? Is the response to that we always will need to outsource goods because Americans will never want to pay that much? Or do you agree that we do need to bring back these jobs? It's just a question of how.
No, you want to bring back the jobs that provide tremendous amount of value add. You don't want to build t-shirts. You don't want to freaking make t-shirts in America. Okay. If you want to bring back advanced semiconductor manufacturing, I can agree with that. I can get behind that because that's a national security thing. But bringing back t-shirt manufacturing to the U.S. is not going to do anything.
Why? Why is bringing t-shirts back to the U.S. bad?
Because it's super low margin. It's super low margin. It makes no sense. You're not adding any real value to it. So the products that would be made, like not to mention, you would have to compete against Bangladesh and they're super under costing. Even if you applied like an 80% tariff, you would still be screwed over because that's just how low cost manufacturing some of the stuff is. Not to mention that labor segment could be used in other parts of the economy that are much higher value add. Not to mention if you're basically restricting immigration to this degree that they're doing right now, plus our demographics are collapsing, dude, you're basically screwing over the future. Like I'm shocked. Like I don't want to say this, but dude, I regret voting for Trump because of this guy.
Wow. Hold on. There, that'll get the chat a little isolated. Oh,
I'm being serious. Like, how do you put a clown like this in the freaking administration? Like a Bitcoin maxi, like tariff everything. Like, bro, are you trying to get us back to the freaking 1920s agrarian society? Is that the fucking goal here?
What was your take on the robots answer?
We're nowhere near robots. Like
that part got me, bro. That part got me.
Bro, this is a gift to the Chinese, bro. The Chinese are making deals everywhere, and the Americans are putting up tariffs everywhere, thinking that's how they're going to balance the. I mean, I honestly think this has to be a strategy. There's no way this is not like some kind of just, oh my God. Like, I hate the Democrats. I hate them so much, dude. Like, I hate Democrats like there is no tomorrow. But, bro, I swear, I am like, bring back Sleepy Joe, man. You know? Like I can't stand the Democrats and their stupidity when it comes to like social issues. But God, the Republicans and their economics, like it's just come on, guys.
Now look, here's the thing. Although I agree, I think Lutnick. And you know what was interesting about this is when she mentioned the fake news stuff, or when she mentioned what do you think about the media asking if you actually talked to the president, I don't think that was a bad question. The reason the media is questioning if Lutnick actually talks to Trump, which obviously they talk, but the problem is he's flip-flopping every other day. And so that's why I think the media is rightfully saying, wait, do you guys have a plan? Are you guys congruent on a similar idea? Because it seems like the flip-flopping makes it seem like you're not. Here's the thing though, Kris, although he's saying a lot of nonsense when it comes to robots and tariffs, at the end of the day, do you think it's just negotiating? Because if it's just negotiating, maybe all the BS he's saying is BS for a reason. He just wants to get China, Mexico, and Canada to the negotiating table, and they're not actually going to put on tariffs in the first place.
No, dude, this is not a plan. You can't say we're going to tariff you, then not tariff you, then tariff you, and then say, oh, well, maybe motor vehicles are exempt, and then the next day say, no, everything is exempt. Like, bro, you can't do this. Like, every business leader right now in the country is probably like losing their shit, man. They're probably like, I don't even know how to price my goods anymore. Imagine right now, you're a company, you're trying to figure out what the pricing of your product is going to be. On one hand, you have a tariff. On the other hand, you don't have a tariff. And then it's like no tariff. Like, and it's not like, okay, months at a time. I'm talking about 12 hours, dude.
Less than 12 hours.
12 hours between conversations about this. I'm sorry. This is not how you run a business. Imagine right now, you went to somebody and said, yeah, I'll sell you a product for X. And then like literally you get a phone call at night. No, sorry, we can't do that. We're going to have to renegotiate the price. And then in the morning, you have to renegotiate the price again. Like, you're not going to want to do business with a guy like that. You're not going to want to do business with a country like that. You know, just, I don't know, dude. This is some retarded shit that's happening. I'm sorry for everyone, people in the R word. Okay. I know that everyone's like, oh, I grew up in a different time when retarded was not as, I don't know, politically jarring. I will try to stop using it. Okay. But it's just
also, look, I think to all the people that are upset that Kris just said he didn't feel like voting for Trump, you got to remember, like, Kris has been a Republican for a very long time. If Kris is getting to the point where he's not happy with this administration, you can disagree with him, but it is what it is. I'm sure there's other people that are also wondering, who is this guy they put in?
Look, I'm just saying, like, this is not deal making. Deal making is you live up to the deals. Otherwise, no one is going to trust whatever deal you put in. I mean, at this point, would you trust Trump making any deal with the guy, knowing that literally within 12 hours, he could change the deal on the spot? Like,
why do you think the 10-year is pumping?
Because this guy is literally talking about some of the most inflationary things in the world, about bringing U.S. manufacturing back to this country and paying $40, $50, $60 an hour for a product that's currently being made with $5, maybe less than $5 an hour. And at the same time, you have extremely low unemployment right now. You know?
Yeah.
It's one thing if you had 10, 12% unemployment and you did something like this to basically boost up domestic manufacturing, but you have record low unemployment right now. You know,
Do you look, obviously if the Harris administration was in office and they were passing dumb economic policies, we would be doing the same thing, right? We'd be critiquing them, trying to find the faults in them. That's kind of the job of like the media, because we are also part of the media of trying to figure out what's going on. Do you think there is enough good that Trump is doing that is outweighing the tariff flip-flopping?
I mean, the only things I could agree with some of the social policies around like men not being in sports. Like I totally
besides that, I'm talking about just economics. Forget the social stuff.
I can't even it. There's no way to tell because day to day things are flipping. You know, like you can't even say, oh, I agree with Trump because within 12 hours he's gonna flip around. Like, how do you say, like, I support the president's mission to X, and then literally 12 hours later, the entire mission is like scrubbed, and it's like, let's do something else.
Yeah, dude. When he said the robots thing, I kind of lost my, like, that's when I was, because as a debater, right? I've been in these moments many times in my life. It's called cross-examination, right? Where you're asking your opponent questions. I have been lucky enough to be in many moments in my life where I ask them one question, they have an answer, then I ask them the punchline question, and then they have a stupid answer. And then you realize, oh, I just won the debate. Like, sign the ballot, it's over. Like, they look like an absolute idiot. I think the reason you could even hear the CNBC host kind of laughing in the background while he's talking is because it made no sense. Like,
dude, I don't know what this is, but man, let me tell you, day after day is going by, and all I'm saying to myself is, Kris, you need to get more defensive. You need to get more defensive because, like, honestly, I really think that theory that we have with Trump bringing general chaos and instability into the market, and that pretty much like causing people all sorts of investment anxiety, whether that be at the grassroots level on like small business, medium, long, like, you know, big business, like you don't know what this guy's going to do. So the only thing you can do is not invest, you know, and instead focus on things that are basically just fixed.
But this is my point. Do you think it's short-term chaos that's eventually going to go away? Like, I know you're saying the flip-flopping, you can't trust it, whatever. But in a month by now, if that goes away, they get some deals. Is that the end of it?
That's the point. I don't even know what deal this guy is going to live up to. He reneged on his own deal. The USMCA was negotiated by him. Okay. Now he went against that, and now he's going back to it, saying, no, everything in the USMCA is correct. I mean, come on, guy. Like, what are you doing? And then here's the part that honestly we really do need to acknowledge. All the stuff that he's doing right now is going to cause a lot of chaos, and it's not the billionaire, the millionaires. They're not going to be impacted by this nearly as much. Okay, it's the guy on the street, dude. You know, when you have 50,000 layoffs at the VA, that doesn't affect someone who's a millionaire. But I mean, that's not going to affect me. That's not going to impact people who are well off. Like, we know how to navigate the situation. But dude, imagine losing a job at the federal level. You've been working 20, 30 years and saying, oh, you know what? Now we got to get rid of you. I mean, that, and dude, I totally agree that there are some levels of over hiring that the federal government has done, but you have to reduce these things in a structural way. You can't just do it by whatever process that they're doing. I mean, the average person is going to be hurt by this.
Kris, okay? What was your reaction to the 172,000 number this morning?
I mean, if the goal is general chaos so that you get the Fed to cut, I mean, is that the goal here? I don't know. I don't know.
But do you think the labor market legit is weakening with this data?
Clearly, because the thing is, dude, every business leader is asking themselves right now, what is my demand going to be in the future? And if they have uncertainty, they're just going to say, you know what, I don't need to hire people. Instead, let me kind of just lay off the people that I have because I don't know what demand certainty is going to be. So I'm not going to reinvest. Businesses are about reinvestment, right? If you make money, you take that money and you're not just going to park it in cash. What you're going to do is you're going to reinvest it back into your business, back into the economy. But if there's uncertainty on what's going to happen, then you will sit in cash. And yeah, will that bring inflation down? Absolutely. But you're also risking a massive recession that's going to require a crap ton of stimulus to get the economy back running again. You know, so
which you think maybe Trump thinks that's the only way to get rates down? Maybe.
I don't know, dude. This is one of those moments in time where I am honestly just perplexed. Like, I can't even, dude, I haven't wrote much on Patreon or anything because I'm just like, there's no areas where I see anything that I say that's going to be legitimate. Because the guy, I'm telling you, it's tweet by policy. I mean, it's a policy by tweet, and it's not working. It's not working. It's not going to work long term. I don't know.
All right. Well, thank you for giving us your thoughts. We definitely did some analysis.
There's a couple of things I'm going to say straight up, though. There are still pockets of opportunity in this market where stability is not tied to tariffs. So those areas are still worth exploring. Things like I told you, like the whole thing with Verizon, American Tower, Crown Castle, those are going to be able to weather this because they're not directly related to like goods and services like up and down in the market. Like they're pretty like insulated against price shocks, right?
Right.
Another area that I'm pretty bullish on is
Palantir?
LNG. No, not Palantir. LNG, mainly because there's a long tailwind of like possibilities, but you have to be very, very, like, how do I say, very specialized and realize which part of the natural gas value chain you want to be. You know, I wouldn't necessarily want to be in the commodity upstream market, but I also, you know, I like I said, there's pockets of areas where you could be, you could do well on. But man, let me tell you, investing this year is going to be really, really hard. And I'm actually considering going way more defensive than I had originally hoped for.
Defensive to you is just cash, or like in a bond or money market?
Probably exactly what Trump wants me to be in: treasuries and bonds and fixed income, you know, because the last thing I want to do is I want to put money towards equity markets that are just violently gyrating back and forth, in which case you don't know what the outcome is going to be. And also some of the stuff that he's talking about, like there are like long-term policy decisions, like this whole thing that he said with Apple, with like, I'm shocked. What is Apple trading at right now? I'm shocked Apple didn't collapse right now.
I have no idea how this stock is trading at above 230. It's at 230. It's green today.
Yeah. I mean, it's just, this is one of those times where markets do not like volatility. All right. And markets don't like uncertainty. If you want a nice recovery going up and to the right, like you've seen for the last however many years, you kind of want to know that next year you're not going to be screwed over by a policy decision. And companies like Walmart, Costco, all these other guys, I mean, dude, I would say every business leader in the country right now is probably going to be supporting Democrats next the midterms.
You think they'd rather pay higher taxes but less uncertainty?
Oh yeah, because whether you pay taxes to the federal government or you pay taxes in the form of business losses, dude, I'd rather go and just pay the taxes, man. You know, I know a lot of people on here are like, Kris, you know, you're a traitor to the Republican Party. Bro, I'm an American first, okay? I don't really give a shit whether you want to say, oh, you're gonna have to toe the party line. That's one of the biggest problems with the Democrats, that they toe the party line even know when they're wrong. I'm not that kind of guy. If I see the Republicans not doing the right thing, I'll call the Republicans out, even though I'm a Republican. That's what I'm for. That's what I'm about, you know? And I would hope that more Democrats are like that too, when they see stupid policies coming out of their party, that they're willing to call them out instead of just towing the party line. Anyone who toes the party line based on my dear leader sentiment, you're the person who's actually the problem. Because what ends up happening is that's how you get into the zone where ultimately people like become uniparty states.
Yeah, I mean, look, I think it's more credibility coming from someone who voted for him, calling him out, because you've been a pretty big supporter of him, and so for you to call him out, it's not the critique should be to people who don't say anything in the face of stupid. Like if I didn't call out that stupid take on robots, even though I'm freaking invested in private robot companies, I can't live with myself. That's just being inauthentic, right? There comes a point where you have to call out certain things that are stupid, and you go as far as you want to go, right? I don't personally think that certain policies would be better in different administrations than not, but I can understand how this policy and this flip-flop back and forth, it's childish and it's creating a lot of uncertainty right now for the markets.
Yeah, I mean, dude, even geopolitically, this back and forth with Zelensky and all this other stuff. Look, right now, here's one of the dumbest things that I saw today. I'll tell you two things. Number one, he wants to end protection status for the Ukrainians. There's an active war over there, dude. Like, come on, what the hell is wrong with you? And then he also, like, we had all these people from Afghanistan who are like former, like, that worked with us in Afghanistan. These are our allies. He wants to end protected status for them and deport them. I'm like, are you like, bro, you will leave America with zero credibility in any future conflict because you know that the Americans are not going to have your back. Like, you can't do that. You just can't. Like, sorry.
Next 4 years, it'll be fun.
No, it's not going to be fun, dude, because there's going to be a lot of people that are going to be hurt by this, dude. It's not fun for the average person living day-to-day life trying to just get by, man.
I agree with that, but the one disagreement I have is I do think there is a strategy behind this madness, and I think we still end the year much higher on the S&P. Like, I don't think this becomes one of those years where we go down or are flat because of this stuff. Like, do you think the S&P still? Do you think it's still a bull market for 2025 or not?
I don't know, dude. Maybe in the second half, maybe things will calm down. Maybe this is just an early salvo of all the stuff that he wants to get out the door. But I don't know, man. This is, I would say, if you have done well in 24, it's time to basically at least keep your forward projections somewhat moderate and be a little bit more defensive, be a little bit more hedged oriented, so that this way you're not going to be dealing with the fallouts of all of this. I mean, valuation multiples in the face of all of this, if you don't think that they're going to compress, I'm sorry, dude, they're going to compress,
I agree with that. The problem is if NVIDIA continues to put up this type of growth, at some point the valuation becomes stupid. I already think it's stupid, but let's say it gets down to $95. Money will step in. I think you would agree with that. Unless the tariffs are so uncertain that money doesn't even step in at 95, right? Or we get a recession.
The problem is you don't even know if the tariffs are going to apply or not 12 hours from now. How do you run a business? I'm telling you, how do you run a business? How do you even give guidance for 2025? Considering that you don't know what your profit margin is going to be, because literally every other day is a back and forth on something like this.
But here's my point. Let's say by the end of the month, let's just assume this hypothetically, all the tariffs are gone and Trump gets a deal with China, Mexico, Canada, yada, yada. They get a really good deal. All the tariffs are gone and we're back to normal free trade.
But that's the point, that there's no way you can tell that the deal is actually even going to last.
Well, let's say it does. If it does, then I think we're good, right?
He had a deal literally a week ago with Mexico and Canada saying that he's not going to tariff them, and now he's going to tariff them again. Honestly, the only explanation that I have to this is that Trump really, really wants that inflation number to come down, and he's willing to exact a lot of pain in the equity markets, a lot of pain throughout the economy, so that the Fed starts its cutting cycle. That's the only thing. That's the only reasonable explanation that I can give, other than, hey, I think this guy has basically lost his mind. And I don't think he's lost his mind, because these people are market operators, But when Lutnick comes out and he says all of this stuff, it's a little bit shocking, dude.
I agree. I don't disagree with any of that. I just still feel that earnings growth is strong and it's not necessarily weakening until the implications of these policies. Like, if you actually put tariffs on Ford, yeah, their earnings are down the drain. But Ford just got their auto tariffs extended for a month. So to your point, you're like, well, this is why you can't trust whatever he says, which creates the uncertainty. I agree. My take here is that if by June or May, it's definitive that Ford will not get auto tariffs and there's no more uncertainty about that, I think the market can move forward. Your point is that the market is just never going to know, right? Which is why you're saying there's going to keep being volatility.
Yeah, that's the only thing that I can think of, man.
Yeah.
It is what it is. We can't really do much at this point other than, just take everything one day at a time. And hopefully it's one of those moments where we can just, I don't know, coalesce around talking about maybe fixed income, because that's pretty much what I'm thinking about for the next like 6 months, dude. Just like I need to make sure that I'm in stuff that's safe, that's not going to screw over the portfolio, that I know I'm
but even when you say that, like Google is still safe to me, right? That's not
no,
scary.
companies like that are fine. I'm saying just the more speculative stuff.
Gotcha. Okay, no, you and I are agreement on that. There's no point to be in speculative stuff right now. No point at all.
Yeah, because if especially if you're trading at a high, first and foremost, a lot of the stuff that he's doing, it causes people to rotate from, in my opinion, from growth to more value centric parts of the market, right? So if you're in a company that's poised for a tremendous amount of growth, that's indirectly not going to benefit from tariff or volatility, then that's kind of where you want to hide out a little bit.
But again, Chris, that rotation from growth to value to Verizon, I don't think that's a 2025 trade. I think it might be a March or April trade, but I think the place you still want to be is Nvidia at the end of the year. Like
we won't know. We won't know. Hopefully he doesn't screw over the AI. Like, see, that's the other thing too that is perplexing to me, because we still have the backdrop of all this AI development, which is great, right? I really appreciate that, but at the same time, like, can this screw that whole thing over as well? I don't know. It's a very, I don't know. This is going to be a very interesting market to be in. The one thing that I did mention on Twitter, I don't know if you saw, which is some of the regulations on banking. They may loosen certain regulations to allow banks to take on more treasuries as a part of their.
when did they announce that?
They didn't announce it yet, but there's policy discussions about that, where banks right now they have like capital requirements that they're allowed to have, and there's a limit to how much they can do via treasuries. But if they kind of like take that away, then the banks can actually buy way more treasuries and hold those on the balance sheet, and it won't count against them in their calculations that are required, like legally. So I think that could be something to just keep an eye on, because that could mean that we get lower tenure in the future. So but then again, then you have this tariff talks and things go right back up again. So I don't know.
Yeah, the dollar going down today to its 2025 lows, but the 10-year being up, I think, is emblematic of this uncertainty that the administration is imposing.
It's one thing that's kind of sad to me. I think if there were half a decent amount of Democrats that were actually like good at speaking and actually could reach out and be more moderate, they could literally take the House and the Senate in the midterms without any issue. I don't think that's going to happen. I think Trump's mandate comes from the fact that you have such a weakened Democratic Party.
Well,
How do you feel about
that? He lost every swing state, so I agree.
Like you want to have in government, in my opinion, the best thing is you want to have the highest quality people against the highest quality of people. That way you get like the best outcomes. But right now, that it's just whatever.
All right, Chris, thanks for your thoughts. Chris's Twitter right there in the chat. Also, congrats on 20,000 followers on Twitter.
Thank you. Appreciate that.
There we go. Thank you, Chris. Appreciate you. Catch you later. Bye. Well, that was very interesting. Howard Lutnick. Yeah, dude, the robots thing got me. I just there's no way I can't react to that. I mean, that's just, you can't say that. That makes no sense. It just doesn't make any sense. Anyone who thinks that makes sense, it's just not true. That doesn't make sense. You cannot say we're going to use robots to make things cheaper, and that's going to create more jobs, because that's not going to create more jobs. And anyone who says, oh, well, people need to take care of the robots. No, they don't. If you listen to the Brett podcast with Figure that I did 2 weeks ago, he says very explicitly, robots will be making the robots. Will there be jobs necessary to deal with all the manufacturing? Yes. But the end goal is robots make robots. The end goal is not humans are putting all the parts together and that's going to create these massive influx of jobs. Like if the robot can create itself, boom, that's the end game. That's how the robot companies get their revenues to go through the roof, because they don't have to pay any people to build the robots. So like but it's so far away, dude. Like
It's like at least 5 years away in terms of massive commercial scale, in my opinion. I think 2025 will get some updates. I think 2026 will get a little bit more progress. But in terms of like hundreds of thousands of robots across factories, that is going to take time. And that's not happening overnight. And if Apple wants to deploy humanoid robots to make their phones, who are they going to buy them from? Because Figure can't manufacture all the robots needed to handle iPhone demand. Neither can Tesla. Like, neither can Boston Dynamics. So the robots thing was just insane. I think everyone's got to recognize the robot take was insane. I mean, you could visibly tell the CNBC hosts were laughing when he said that, because that can't be the answer to decreased costs of goods, is that you use robots. Eventually, that will be the answer. But that's not happening in the Trump administration, not in the next 4 years. We don't have the economies of scale to make that happen. So I don't know, dude. This is very, very interesting. You are thinking humanoids meant not industrial robots? Yeah, but that doesn't matter, guys. Industrial robots are already existing right now. Why isn't every iPhone made through an industrial robot? China employs, or Apple employs, millions of humans in China to build those robots. Unless you're telling me industrial robotics is going to upgrade exponentially in the next 3 years of the Trump administration to be able to replace all the human jobs necessary to make t-shirts, TVs, iPhones, iPads, etc. It's like, that's just not realistic. Like, he was selling a pipe dream right there. That's not real. And the worst thing is, he said that, well, if we bring the jobs back to America, it's going to decrease costs. It's like, no, it's not. That's just not true. Like the t-shirts do not have a high enough margin to decrease costs. The semiconductor stuff that Kris was talking about, manufacturing, TSMC, that I'm all for. That makes a lot of sense. But basic water bottles that you buy on Amazon for like $10 that gets imported from China for $3, making that in America is not going to make that water bottle less than $10. Unless you make a lot of them. And you're probably not going to make a lot of them because supply chains don't flip overnight. So, I don't know. Are you saying Chris Camille's take on this is completely wrong in the short term? Chris Camille's take has always been over the long term. If you read Chris Camille's take on humanoids, he does not think it's happening tomorrow. He thinks it's a 2035, 2040 story. He's just being well positioned because he thinks it's going to be the greatest return of his lifetime, which I think is correct. Like, the TAM for robots will be making some of these companies, I think, the best investments ever. But it's not happening tomorrow. Like, it's really hard to make a robot, bro. All the videos you guys have seen, they're doing very basic things. Like, they're not actually like in full production yet. And because it's hard, it takes time. You got to train the models. We don't have AGI yet. Like, all of this stuff takes time. And I think he pulled robots as an answer to resolve the question of cheaper goods, but that's just not the best answer. Regardless, that's what we got from Howard Lutnick. I think CNBC kept that interview going for much longer too. They usually keep an interview at like 7 minutes. They kept that thing at almost 20 minutes because I think they I think they wanted to keep poking him, and he kept saying some stuff that was just, not exactly the most conducive to making sense right here. Granted, he did say for a month we've got USMCA products that are delayed in terms of the tariffs, which is good. It goes back to the point that Kris was making about volatility and uncertainty, and you can't trust whatever the administration says. But at least that's delayed for a month, and Robinhood's green on that, so that's good. I wonder if that goes viral. I wonder if that clip that we saw, those 2-minute clips of him talking about the robots, I wonder if that actually goes viral. I wonder if everyone else like really makes a big deal out of the fact that that was his answer, because I just dude, I can't tell you how many times I've been in a debate round and I catch my opponent with the Lutnick face. Like, there's been many moments where I've been able to like honestly, that's why I was a good debater. I had like pretty good cross-examination skills, and I was just an animal, bro. I didn't show any mercy. Like, Sarah was being nice on CNBC. I was an animal. I would rip your head off because I really wanted to win. And by my time I got to my senior year, like, I lost like 6 rounds my entire senior year out of like 120 rounds. Like, I was aggressive, right? And part of the reason was because people knew when they stepped into a debate round with me, I would ask some pretty hard questions. And there were many times where the judge would start laughing after I asked my question because they would know it's GG, it's over. And the opponent would be stumbling over their words. It got to a point, bro, where once when someone started crying, someone started crying, bro. And I was just looking at them cry. I wanted to be like, wipe your tears off, motherfucker. This is a debate, but I didn't say that. I was being respectful, but they were crying. And then the judge is like, are you okay? And then they're like, I forfeit. And I was like, all right, cool. I get to get lunch early. Like I had no sympathy, bro. I didn't care, bro. I was like, oh, you want to cry? Okay, you can cry as long as I get the win. I'm leaving. Like I was an animal. I was ruthless. I did not care. I didn't care about your feelings. Like, oh, you can't answer the question. You're gonna cry about it. No, welcome to the real world. Like it is what it is. So that's how I felt in that interview, bro. It brought me back to my debate rounds, watching this guy pull out robots as his answer. By the way, many times I was Howard Lutnick. I was the guy who I also got trapped by really good debaters that I went up against, right? And I didn't have a good answer. But my answer, my BS answer, was always going to be better than that BS answer because I BS, trust me. I know how to BS when it comes to not knowing what you're talking about. You guys see that for basically 6 hours every single day. But when it came to debate rounds and having to BS, my BS would have been better than the robotics BS. And quite frankly, I can remember many specific scenarios where my BS was so good, the judge starts nodding their head and I'm looking at the judge like, damn, either I'm really good at BSing or that judge is stupid because they should not be nodding their head up and down on this. But it is what it is, right? It was not a good answer. It was not a good answer. Oh my gosh. Could you debate Grokkamit? Yes, I could debate AI. I could beat AI. I think. Hopefully. We'll see, bro. We'll see. We'll see. One day I'm gonna have to have a debate with Grok. I feel like if I could out Grok, that would be a good one. You have a black screen? Dude, what is wrong with StreamYard today? This is ridiculous. Why do they keep doing this shit? Okay, now it should be better. Like, this is ridiculous, bro. But yes, look, when I did debate, it's still not there. I was pretty aggressive with how I did debate, and that's what some of those questions looked like. All right, it should be good now. Let's see if it's good now. This is so weird. They added, okay, now it's back. They added this new feature where you have to add the scene, and it's like, I don't know why you have to keep adding it, but there you go. All right, cool. So let me ask you guys in the chat. I mean, obviously I saw a lot of your guys' reaction and you also thought it was kind of stupid what he was saying. Dude, and I want this administration to do well. Like, obviously I want the markets to do well. I don't have any ideological agenda. I'm not some guy that like wants to see Trump fail. And neither is Kris, by the way. It's sometimes you got to call it out. Like, it makes no sense. Okay, so question is, did Howard Lutnick BS his tariffs answers? That's the question. Do you think he BS'd his tariffs answers? Let's see what else we got going on across the board. If there's any other headlines, I don't think there's anything else too crazy. Yeah, that's pretty much it. Yeah, there's no other headlines. There's nothing too. Do we have anything here? No, the 10-year. Let's get this one little quick update on what they said. So this is their recap of that interview, and then we will end it off there. What'd you guys say on the poll? Yeah, 82%. All right, so I think all of us can recognize some of those answers were a bit BS. Even if you support the administration, I mean, it's just not the best answers.
Client with their trade deal of USMCA. Okay, that's good. It shows there's sort of willingness to mitigate this. He also said that by April 2nd, we're going to be focused on the reciprocal tariffs. He mentioned Canadian dairy as an example where they have violated the USMCA and given preferential treatment, and said that maybe, hopefully, if they do enough, these 25% tariffs will be off. Yes. So that was the first time I've really heard, how to get rid of these if they're doing enough. And he also said that they're doing a good job trying to appease the United States. Yeah. All of that's psychologically important. Also said those short-term stock market moves are not a concern. They're going for the big picture, and the big picture is growth, which would be very stimulative for the economy.
A lot of words, a lot of focus on reindustrializing the country and reversing decades of kind of global supply chains. What the market heard was they're stepping back 2 days after they put these on. That's all that the market heard was they put these all across the board aggressive tariffs on, and they, without really anything tangible happening in the interim, except the stock market's unsettled, they're backing off. Whether that is a correct conclusion or not, that's what the market got. So I think we're still in this mode where, as I said yesterday here, you can plausibly say at the lows of the week on Tuesday, 5,700 plus on the S&P, that was a moment of kind of maximum tariff aggression, when you perceive the growth scare in a pretty vivid way. And from there, you'd have to have incremental bad news, maybe to break decisively below that, unless we get some global weirdness going on. Yesterday's range in the S&P was inside Tuesday's range. Today, we're so far inside yesterday's range. So the market's trying to find its footing here and feel like, okay, maybe we can have adjustments on the tariff front. We're still going to be in suspense about April 2nd. We don't really know, what the steps are here, but you can sort of say we're oversold enough to at least attempt to try and marshal a little bit of buying interest around these levels.
I can envision another world in which his comment about a put on the market would be seen as bearish, but the market really didn't seem to mind that. This idea that they are relatively insensitive to the markets.
True. I think that was pretty much understood. I mean, if there's any strategy here, it's not necessarily about pleasing the market in the short term, because everything they've done to this point has not been directed in that way. So
that is 100% correct. Again, they do not care about the market in the short term. Trump even said they don't care about the market in the short term. They care about the 10-year yield in the short term more than anything right now.
Oh, yeah, I think the idea of balancing the budget, it's not even in this galaxy to actually balance the budget. But if they're going to have a little bit of fiscal restraint and you're going to slow things down on the spending side, and maybe you get the CR and it looks like it's heading in that direction, then yes, the bond market can calm down. What I'm more focused on, actually, after you've seen this 6.5% high to low move down in the S&P 500 over 2 weeks, it looks like what late July looked like when we had that peak, and then we got the yen carry trade panic. Now, I'm not saying we're getting that, but you're seeing global yields and foreign exchange volatility burst higher. That, to me, is what we're on edge about. If we get a good jobs number tomorrow and nothing in the global markets are getting weird, I see no reason why we're going to new lows in the near term.
I feel like psychologically, the market was really worried about growth coming into this week. And we did have a few important reports. The services number coming in better than, 53? I mean, that was really expansionary. The jobless claims bouncing back to trend and not staying elevated after a spike last week. Again, well, let's wait for jobs tomorrow, but a little bit of relief there. And then, I've been making this point. We are seeing lower treasury yields. We are seeing lower energy prices, maybe for the wrong reasons, but eventually that's going to be helpful for the stock market.
I agree. And in fact, it was interesting this morning because you had the Challenger layoff data come out, right, which is very squishy data. It's announcements, usually doesn't move the market. The 2-year yield immediately sank on it. And then it took claims to be solid for yields to back up again.
So I agree with that. And that's where I disagree a little bit with Kris, right? I think at the end of the day, if we get enough pain in the markets, which creates 10 years and 10-year yields to crash, and as a result, bond yields to come down, which gets mortgage rates to come down, et cetera, the dollar to come down, which is what we're seeing right now as well, I think people buy stocks. I don't think you want to be in Verizon by the end of 2025 over NVIDIA. I don't think that's the move. I think over the next 2 months, maybe Verizon's a better hedge. But I think the era of technological growth fueled by productivity, margin expansion via AI, nothing's changed in that thesis at all. Like, tariffs have just created a string of volatile moments that have made the markets, you could say the word exciting to say the least, but obviously very, very uncertain. But that doesn't mean you buy Verizon over NVIDIA, in my opinion. But in the short term, Verizon is going to be better than NVIDIA. 6% yield. No one's going to cancel their cell phone service, whatever. Same thing with things like Coca-Cola, Berkshire Hathaway, all this stuff. But I think growth wins at the end of the day. And we are in too much of a technologically fueled era where this type of growth gets ignored. So I think if NVIDIA grows 70% next quarter, I don't know if the stock goes up and down, but I don't think that can be ignored to an extent. Like, do we let NVIDIA go back to 50, 60, 30? Like, where and that floor, as we're seeing right here, is around 110. It's not really getting violated below that level, even for the past couple of weeks. It hit that once at 108 in the pre-markets, and then it bounced. So, I mean, at what point do market participants say this is stupid? We are going to bet on growth. Same thing with a company like Palantir or a Robinhood that's going to have their February metrics come out in a couple of days. Vlad already gave us a preview of it. They're going to grow again another 40 to 50%. Like, you just don't fade that. You don't ignore that. And if it does dip on that type of growth, you buy that dip. You don't go and buy Verizon, right? Even if that dip ends up lasting for 6-7 months and it still stays depressed, you don't ignore that type of growth because there's just not a lot of companies in the equity markets that are putting up that type of growth. So to me, if Trump continues the uncertainty that he's keeping up for the next 4 months, 4 years, etc., yeah, it's going to be hard to get really good stock market returns because obviously the stock market's not going to know which way to go up or down. My belief, and maybe it's hopium, but my hope is that eventually this uncertainty becomes certain. There's probably going to be something else that creates more uncertainty, but at least this tariff stuff, which is directly impacting the equity markets, resolves itself. And the growth on these stocks can't be ignored. And as a result, people come in. Now, we've got to avoid a recession for that thesis to play out. If we get a recession, that thesis goes out the window. But that's kind of how I'm thinking of it right now. Like, I don't think you sell NVIDIA here. At least I'm not selling NVIDIA here, right? Because you want to get defensive. Now, hedging your portfolio and getting a bit defensive is not bad. But I don't like as Kris said, he's not selling Google here because you don't sell that name. And Google's not necessarily a defensive, quote unquote, but it's still obviously very volatile based on all this Trump stuff. But I don't think you get rid of Google. I don't think you get rid of Meta. I definitely don't think you get into spec though. Like I'm not buying Rigetti here. And I know a lot of people like Rigetti. They like the quantum names and that's fine. And if you love it, you understand the thesis, then you're good to go. As I say that, of course, it's up 10%. but I'm not personally with my portfolio taking a chance on that because I just can't sleep well at night knowing I have something this volatile, right? So to me, I wouldn't venture into this stuff here. That's how I would be more defensive, by not taking a chance on some of these riskier names. Same thing with Archer, SoundHound. Like I get it, promising companies. I just can't take that risk in this time. But it's not like buying NVIDIA here to me is risky. It's riskier than buying Verizon, but buying Rigetti is like way riskier than buying any of those. And that's where I get a little bit more hesitation. All right, cool. I think that's it for today. I have nothing against Verizon. I have something against StreamYard, though. If StreamYard was a stock, again, I would have some very bad issues with it. But no, again, Verizon defensives, they're going to do well with this uncertainty. I don't think they outperform growth by the end of the year. If we avoid a recession, I don't think they outperform growth by the end of the year. How do you feel about Oklo? Same thing. Oklo, same, super speculative and volatile. You got to be betting on AI data centers and nuclear fueling it to buy Oklo. Yes, Palantir is also very volatile, but the good thing is I got into Palantir very early. Like, look, if someone asked my honest advice and said, hey, Amit, I have no Palantir, should I buy right here? I would say no. Because like the volatility of this is something that's better than a Rigetti, because Palantir is a real company. I know Rigetti is real, but you guys get my point, right? Palantir is doing billions of revenue. But still, Palantir is trading at a very extended multiple. So look, if you want to sell puts on it at some attractive levels and collect some premium, and then if you get assigned at 75, it is what it is. Like then yeah, I actually don't hate that. And if you have to DCA because you really want to start a position, like inevitably it's down 30% from its highs, like you're going to have to buy at some point, right? Same thing with Tesla. I bought it at 288. Tesla's below 288, but at some point you got to bite the bullet when it comes to getting into these names. And I don't have a lot of exposure to Tesla, which is why I'm biting the bullet. So if you don't have a lot of exposure to Palantir, I get biting the bullet. But if you've been in Palantir for a long time, I mean, the multiple is still incredibly extended, and it needs to consolidate and hold these levels with good earnings growth, along with the Trump administration not imposing these dramatic tariffs in order for it to maintain. It got a black screen again. All I was showing was Palantir stock on the black screen. But this black screen thing is really annoying, bro. Like, this thing is getting stupid, bro. Like, this is getting insane. I'm thinking I'm thinking I got to leave StreamYard, bro, if this keeps happening. Now you can see it. I was just showing Palantir stock. That's it. I think I'm going to really start exploring something other than StreamYard, bro. This is dumb. This is getting dumb. Like, or I'm going to email them and be like, get rid of this stupid feature you put on the account. Like, this is, I should be able to share a screen without getting a black screen. Like, this is ridiculous. But anyway, that's my point, right? That's my point. Palantir is also very volatile. So if you're buying Palantir right now at 85, again, I'm very bullish on the company, but you got to buy it understanding that we are in a very volatile time, and Trump says one thing, growth valuations get compressed, and then, you know, Palantir could take a hit. Now, granted, Palantir has been holding up very well, and I think that proves the point that the bulls have been making, which is that, look, we know it's expensive, and the bears keep saying it still has another 50, 40% to go down. I disagree with that. I don't think Palantir falls 50% unless the market falls aggressively. Now, maybe I'm wrong, but I think Palantir's moat is strong enough to sustain its momentum, even at an extended multiple, which doesn't mean the multiple can't get compressed, but I don't think it gets compressed down 50% to $40. And then that creates a world where Palantir is still able to hold up, right? But still, we are in very, very, very volatile times. My internet's being laggy. All right, I think it's time to end the stream, dude. This is getting annoying. I think I'm gonna get a new internet provider too, bro. Like at this point, like internet, StreamYard, everything. It's just every single day during the week, it's been annoying. But then sometimes, like last night when the market closed, it was perfect. And we got the whole Robinhood stream. We got the whole Robinhood quiz thing. Everything was perfect. Like, so why does it decide to be stupid at 11 a.m.? Like, I don't know why it does that. The audio is still good though, right? The audio, you can hear it. Yeah, the audio is good, but the video is stupid. Your mic is working great though. Yeah, I don't know why. At least the mic is good, dude, because if the mic was bad, that makes it the worst. All right, cool. Cool. That's it. All right, that's it. We'll end it out right here. We'll be back on the market close, guys. Very interesting morning with Howard Lutnick. Again, it is what it is. I know Kris got super political. Some of you guys probably hate him for his statements. In my opinion, you can't really hate someone for their political beliefs at the end of the day. Like, we're all humans, and you guys can disagree with Kris all you want about him flip-flopping on Trump, whatever you may think, but he's providing analysis, and you either like that analysis, you don't like that analysis, but I don't think it means you hate someone just because they're, calling out what they see. So it is what it is. It is what it is. And I think everyone had to call out the robots thing, bro. I think everyone had to call out the robots thing. That's one that, as a debater in my heart, I could not see that exchange and not say there's something fishy going on with that. All right, word of the day. What do we got? Word of the day is libretto. Libretto.
Libretto.
Of course, libretto. Of course. How did I say libretto? Like, it sounds like, it looks like libretto, but it's libretto. No, that's because the E and the R, I thought the E was before the B. Yeah, that made no sense. Libretto. Okay, libretto. What is libretto? The words of an opera or other musical compositions. The provocative libretto led to a drawn-out scandal for the opera's creators. The libretto contained references to both myth and contemporary events that added layers of meaning to the performance. Okay, this word sucks. We're going back to vocabulary.com. Dictionary.com has failed us for the past 3 days. Okay, next word of the day, mal de mer.
Mal de mer.
Mal de mer is a queasy feeling many people get when they're on a boat or a ship. You might feel fine on a large cruise ship, but suffer from mal de mer when you're on a small ferry. Well, I think that obviously describes the feeling of everybody investing in the markets right now. Mal de mer. Mal de mer. Dude, I'm so bad at words. I started doing bloopers in the daily recap, which we put episode number 3 out yesterday. Thank you everyone again who has been checking it out and watching it. Really means the world that you guys are liking that series, because I really love creating it every single day. I put bloopers at the end, and we can watch the bloopers for a second, because I have so many of these bloopers. You guys don't even want to see the bad bloopers, bro. Like, the bad bloopers are bad bloopers. It's blurry video again. Of course, it's a blurry video. Of course. At least the audio is okay right now. But in the bloopers, I say that I can't talk. I just don't know how to talk. All right, here it is. That people are getting value from this. We are here for episode number. Hey, everybody, welcome back to the channel. We are here for episode number 3 of the daily recap. Before we get started, I just want to give a quick shout out to everyone who's been showing support. I can't talk. That's a tame one. That's a tame one. Usually it's me saying mother effer 15 times in a row because I get really mad. Bloopers. So if you got to the end, let me know. Here are the bloopers of today's show. To everyone who's been showing support for episode number 1 and number 2. I'm really enjoying making this content, and I'm glad that people are getting value from this content. And so we're going to keep doing it every single day and keep getting the guy. Hey, everybody, welcome back to the channel. We are here for episode number. Hey, everybody, welcome back to the channel. We are here for episode number 3 of the daily recap. Before we get started, I just want to give a quick shout out to everyone who's been showing support. I can't talk. You guys haven't seen the real bloopers. The real bloopers, I sent one to Chad. A month ago. Because Chad also, you guys know Chad and Palantir does the Palantir videos as well. So he has these bloopers as well. So we were showing our bloopers. And I got to show you guys that one day. That one, like, I almost threw my laptop, bro. I was so mad. Because after you try saying something 5 times and then it doesn't work, right? Like, you just get pissed off at some point. And you just want to throw the computer. And you say a lot of bad words, like some really aggressive words that are not meant to be said on TV, or on YouTube. But yeah, that's what we had here. All right, cool. That's it. We're out. StreamYard's being fuzzy. I'm going to be looking into a new streaming service very soon because this is getting stupid, and then maybe replacing my internet as well because this is dumb. All right, cool. Yeah, we'll be back on the market close. Now, on the market close, we have the Robinhood thing at 4:45. So we'll be doing that. And we have money market inflows as well. So money market inflows, Robinhood, and those are going to be the main things that we have here today. Okay, hold on. We do have some super chats. I didn't even see that. Okay, hold on. Okay, hold on. Let's do super chats and then we'll end out. I forgot we have like a ton of super chats that I didn't see while Howard Lutnick was freaking talking about robots. Okay, so hold on. So Chicago shootings, 773. Thank you for the $1 super chat. Appreciate it. Swift, thank you for the $2 super chat. Admit that's a fly sweater. Appreciate you. It's a 1 of 1 that Ileano got me. That's the Palantir one, so I appreciate that. Chicago or shootings, Grab or Tesla if you had to pick one. I mean, obviously it would be Tesla, right? Like long term, it's Tesla. I think Grab is a really good asymmetric opportunity, but long term, it's kind of a no-brainer, right? It would be Tesla, in my opinion. Larry Walls, thank you for the $2 super chat. Appreciate that as well. King Hazy, thank you for the $5 super chat. I voted for Trump, but I thought he would fire the people on top, not the Fed workers who just started. Well, Doge is continuing to downsize, regardless of kind of how Trump campaigned on it. So I do think we're going to see more unemployment from that happening as well. Anton, thank you for the $10. Amit, please come visit to Berlin. I'll be your guide. I think we will do Berlin. So it'll be fun, or Berlin and Munich, most likely in the summer. And so, yes, we are definitely going to do Germany. Most likely, dude. The UK, Germany, and France. That's my plan for June. And so it should be super fun, and it'll be a good time. Jason, thank you for the $10 super chat. Robots will take time, but we are not going to wait till they are perfect to deploy them. Do you think teleoperation won't be used? Yeah, look, I think teleoperation will be used, but the point is massive levels of industrial manufacturing to replace jobs, aka labor costs, to be able to get the goods and services that we pay for to be cheaper, as per Howard Lutnick. That's not happening tomorrow. It's not happening next year. It's not happening over the next couple of years. Like, that's why that answer was so egregious. It's like, you could tell the CNBC hosts were laughing, bro. Like he reached down in his ass and he pulled out this robots answer, and no one believed him. Like, just no one. So I think that was the biggest problem with kind of how we played out that answer. Okay, did we get to every super chat? I think we got to it. Yeah. Okay, cool. Awesome. All right, that's it. Thank you everybody for being here. Appreciate it. We'll be back on the market close. We'll do this Robinhood quiz thing. Hopefully we win the $1 million. Skeptical I'm going to win again. We're going to have some stupid question I get wrong, but 4:45, we will have the Robinhood stuff. And then we also have earnings for Broadcom. That's a big one. So we'll have Broadcom earnings today, Costco earnings today, Big Bear AI earnings as well. So that'll be an important one because I know a lot of you guys think about that. Big Bear AI earnings, by the way, the street wants -5 cents and $54 million of revenue. Costco, the street wants $4 of EPS and $63 billion of revenue. And then we'll have Broadcom and HP later at the end of the day. That's it. And then we have money market funds as well, money market inflows. So money market inflows, earnings, the Robinhood quiz at 3:45, And then hopefully we'll get some updates on tariffs. I mean, Lutnick did say throughout the day Trump's going to be meeting with people. Also, he's doing some executive orders at 2 p.m. At 2 p.m., Trump is signing more executive orders. That came out this morning. Maybe some of those orders have to do with tariffs, maybe not. Oh, wow. Hold on. We just got a piece of news. Mexico is exempt from tariffs underneath the USMCA until April 2nd, following talks between President Trump and Mexico's president. Wow, that literally broke 51 seconds ago. President agrees no tariffs from Mexico on USMCA items till April 2nd. So Lutnick mentioned in the morning for Canada, now an hour later at 11:30, we've got Mexico. Is the market moving on that at all? Are we getting any market movement on that? S&P? No, not really. No, not really green. No, we got a red candle. Nothing crazy. Robinhood's flat. Palantir's still down. Tesla's down. S&P 500 still down. I mean, no, we got a green candle. It's a very light green candle. Very light green candle, but it is a little bit of a green candle. Mal de mer. That is what we are in. All right. Thank you, everybody. I'll be back on the market close. Bye, everyone. See you guys then.